And if something has really high volatility, a lot of times that volatility does eventually get realized. Not often, and I would say there's an edge in selling it, but every once in a while, high volatility things are highly volatile for a reason. There's days where you can get a lot of trouble thrown your way on things like Tesla or, Bitcoin or Nvidia. Or nowadays, you have things like NVDL. This thing is insane. Like, this is Nvidia 2x leverage. On that sell-off, that Friday to Monday sell-off, 41% in a day. So again, what happened is a lot of people probably were really long this thing and got margin called and had to sell, and that caused more selling. And now, I think we're getting a little bit of a unlevered bounce back, but you get the point. Like, you have to be careful in this market. Leverage is a dangerous, dangerous thing. And I'm an adamant supporter of using as little to none of it as possible in your trading account. Because again, it's great when it's working for you, and it's devastating when it's working against you. So just be careful out there. I mentioned it earlier, but I'm going to hop off here in just a second to hand over the show to Chris Pulver. Before I go, remember the Edge Finder is currently 35% off. Get access to all of our market data and tools for a massive discount for a very limited time. We're going to take a quick break here. Let Chris Pulver take over the show. If you want access to the Edge Finder, we'll drop the link here in the chat. You can click it during the break, send a direct message to our team. We'll be right back with Chris Pulver just after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Wednesday, happy Fed Day. Markets are just chilling this morning. We've got some levels that I think would be important. I did some earnings trades yesterday that we can discuss. This is the SPY this morning. We've got some market maker levels that are stepping in there right around the 610 handle and between 600 and 595. We have about a 28% volatility on the day, 18 plus IV rank. Price is doing absolutely nothing this morning, which is pretty expected. And the reason that's expected is because there's so much volatility that is likely going to unleash around 2 p.m. and 2:30. So from 2 to 4 today, so 2 p.m. to 4 p.m. to wrap up FOMC plus Powell plus comments, even though it's a big fat nothing burger, like FOMC is going to do nothing today, right? But there's all this volatility on what if, and so all these things have to get priced in. So we have one of the highest probabilities I've seen, ever on this tool, which is the Fed is not going to do anything today. They're just going to hold rates. But it's going to be the press conference. It's going to be Powell's comments. I mean, he really rocked the markets back in December. And so I think there's just a little bit of, hesitation on what does he say? What does the market react to? I don't know. Obviously, now Trump is president. We've got Republicans in power with a lot of majority. Therefore, I don't know if the Fed is going to kind of align with certain things, i.e., pressure to cut more rates, which I think would be a terrible idea. Because inflation is not getting better. And the combination of having multiple prints of higher inflation with PPI and CPI, and then this Friday is PCE. We're going to see where that goes. Actually, I can look at Bloomberg today. I should have another trade on SPX closing in just a couple of minutes. Hopefully that is the case. A 330 trade down to 280. It's right at my mid price. I need to see some bells here in the next maybe 5 or 10 minutes. Hopefully that's the case. It should be fine. I've got a nice little P&L on the day. I also am thinking I'm going to be rolling on some Alibaba. Baidu's up to 91. I've got a 95 call. This is a collar trade on Baidu. Baba sounds like a baby. Alibaba, I have partial shares. Got a bunch of credit spreads in this one. Have some shares. Have some credit spreads. Have some shares. Have some credit spreads. We've had a big run in Alibaba. Now, I wish I had those diagonals on, son of a gun. I put on I just have a bunch of credit spreads. So Alibaba, we had some AI news this morning on it. This is what it looks like. I have some exposure on Alibaba. I'm up right now about $3,100, which is nothing exciting, but it's mostly like cash secured puts, ratio spreads, wide credit spreads. But my lowest price is 75 bucks, and we're trading right now at 99. Now, do I want to go ahead and chase Alibaba? No, I think that's potentially riskier than I want it to be. But the stock is freaking ripping to the upside. What I could look at though is now that we have turned the corner here, can I do something around like the $80 handle? So let me have a quick look here. The Ivy rank is still 72. I don't mind placing a trade on Alibaba. I've got plenty of cash right now. I'm putting a little bit more cash to work though. 2.9, so I've got 1.25 mil out of 295. So I've got about, that's about the same. I did this. This was a lot last year, 40 to 45% of my accounts in cash, and it still is. So, all right, it's about the same. I guess I haven't done too crazy. Anyway, but let me look at something for the $80 handle that I'd be willing to own and maybe own it cheaper. But I'm just going to look at some income opportunities here. Let's see here. That is the sell put, buy put. That was an in the money. I think I took a small loss on that. All my trades now are like 75. Let's see. So 80 plus. Let's try to get something out to like March or April. March, April. Let's see what the premium looks like. It's not awful. 85 by 82.50. If I do a ratio spread, 80 cents on that. I'm willing to own the shares. I wish I could get a little bit more premium. That's not bad. Takes up $2,000 of buying power, make $100. I do have a ownership level. I'd own it around 82 something. So I would take shares at 85 minus the 250 and minus the $1.15. I'd own shares at 81.35. Now 81.35 is not the best price. I mean, if I was really going to say I want to own Alibaba, I would love to own this thing at like 60 bucks. And so I've been patiently waiting, which is why I put these trades in. These are in the Pulver alerts, by the way. Right? So 75, 70, and 65, these are all cash secured puts. It's $590 credit. It shouldn't take that long to get these, bigger profit levels. So I'm looking at probably holding now that price is cooperating, probably holding to like the 90+% take profit. So if my 590, if 590, let's go 590. So if I'm showing like a 60 cent, is that right? If I'm showing like a 60 cents, so 60 cents divided by 5.90. Shoot. 60 divided by 5.90. Yep. So if I'm trading at like 60 cents or less on the debit side, I can just probably close out for majority of the profit, or just wait and just take the full profit. If it's that far out of the money, probability just goes higher that I'll finish out of the money. Dang it. I wanted obviously a little bit more action there. We had a earnings report that is today. How did Alibaba not pop up on my freaking son of a gun? We had earnings today. Aftermarket. Why is it not on this? You got to be kidding me, man. Why is Alibaba not on here? Well, that sucks. I would have looked at a trade at least for Alibaba. We had a big move yesterday. The market's been, pretty bullish, and the news that came out was something on their AI. So Alibaba stock games, it's an AI stock now too, says Barron's. Right? So, I mean, AI is still like the trigger word for 2025. It carried a lot of the semiconductor plays and speculation, quantum computing, all that stuff happened briefly in 2024. But AI is still, if you're talking about it, it's being treated a lot like the trigger word that's putting in some good flows and some gains. But anyway, I'm just trying to think, like, I don't want to chase this stock. I could add some more shares to it. I obviously only have like a couple $1,000s exposed to it. What do I do? Buy some more? I can buy some more. I'll buy some more. I'll throw another $1,000 at it. So we've got price right now at 99. I could buy another 10 shares or so, right? So if I go $1,000 allocation divided by 99.26, I could buy 10 to 11 shares. I'll buy another 10 shares. I know it's not a lot, but if this thing is going to go up to my measured move, I mean, this is one of those big asymmetry levels that I looked at for a while. So I'd love to see Alibaba just no holds barred all the way up to like 120, or 129. So I'm going to throw in a couple more bucks, and if it pulls back, I'll add some more too. But I'll just keep the trade size small, build up like maybe a $3,000 to $5,000 position. So let me go long stock. I'm going to throw in a little bit more exposure here. So I think I've got Alibaba for almost everybody. So Alibaba here, have some shares, have some shares, have some shares, have some shares, shares. A lot of cash secured puts as well. That account. There we go. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Have some shares. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7. Okay. So that account needs some, which is fine. That account has some, and these are 2 new accounts that got added this week. All right. So I'm going to go in and add a couple more bucks on Alibaba. So I'm going to do, I'll do 11 shares. So 11 shares, Alibaba, toss it in. Filled. Okay, I'm just going to go up the list here. A few more shares for everybody. And the reason I'm starting small is because if we have pullbacks on this, I'm just going to add more and kind of dollar cost average into it. Okay. I have 1. This one, I'm actually going to go, for this account, I'm going to go 20 shares on this one. Okay. Go back to 10 shares, 11 shares. Here we go. And 335. I'll go 20 on this one. Okay, so I've got some entries in. Let me check my prices here. Anywhere between 99.16 and 98.74. So it's not the most precise fill, but I didn't have to be crazy precise on dollar cost averaging. So we find this here. Have some shares, ratio spreads, cash secured puts. I put a dollar allocation in. Yep. So I've got the 85.85 buy. I've got the $61 pending. Okay. So I'm going to add in on this here. So I've got all accounts. Aha. So I bought it at 85.85. So my first allocation is actually up a decent amount. And then I'm adding a $1,100 allocation at 99. So 98.74 to 99.19. All right, so I got that tracked right now. So that gives me right now roughly a break even on my $2,000 investment. I have I'll say $99 plus the 85.55. I divided by 2. That gives me a $2,000 allocation with a break even at 92.27. If price goes up to, let's say, got 20 shares or so, that's a total of 1845 invested. If we go to 129 times $2,000 invested. Oops. 129 times 2,000. What am I doing? 20 shares. All right. So I'd make, about $1,000 if it goes up to the level that I want. So here's what I will say on Alibaba. If we have a, reaction, but lack of follow through, then I'm going to look at, this little pop to the upside. If we get a pullback, I'm probably going to wait for a, a 382 to 50 pullback to add a little bit more. And if we come back down here, I will probably do another chunk of like puts and ratio spreads, right? But what I could look for follow through would be, we have a high, we're taking out that high. Any type of hesitation here. One thing on stocks is we don't necessarily get a bunch of pullbacks. So if we go rip to the upside and just a little hesitation, that bull flag could be a good spot just to buy some more. Another bull flag, another bull flag. I'm curious technically if this just has a fantastic run over the next couple of months. If it does, hopefully I can take advantage of it. But I'm not trying to chase and throw a bunch of money at this run, just because every time we've seen this happen, it does spend time pulling back. So if this happens here, it might spend time pulling back. But the nice thing that's encouraging about today's price action is we cleared this high. We've kind of broken the structure, and even if we have a pullback here, I'd still look at this as a bullish pattern. And I've talked about this on the China plays, like looking at some type of crown or head and shoulders pattern that would give me something bullish. By the way, I've got to look at the SPX trade. Did I close out of the SPX? This thing is still going this morning. I mean, come on, bro. 10:30, you're not done. I need this thing to be like closing out. My mid price is 280. It's trading at 280 to 283. How much longer must I wait? Tasty trade. And a lot of this is because the implied volatility is sticky today with FOMC, but it's trading right around that mid price. Just going to wait. I mean, price isn't doing anything silly, so I'm good. It's got to be right there, though. My mid price is 280. It's trading at 280 to 285, 277, 275. Every time I hear 275, I think of Happy Gilmore buying his grandma's house back. Actually, Shooter McGavin bought the house. Anyway, all right. That'll just take a couple more minutes versus changing this to a 285, but I'm not opposed to changing to 285. It just should fill at 280. All right, I'm gonna change it though. 280 to 285. It should fill. It's right there at the mid price. 285 close. 285 got filled. All right, I'm gonna make that update real quick. This one is edit. Profit target hit. $285. Okay, so let me get that updated really quickly, and we'll dive into some other charts. Okay, so I added some trades into Alibaba. If interested, I'll throw this into the tracker here for my Pulver alerts. Alibaba trade updates, did some rolls. I'm looking for my dollar cost average post. Did some credits, recaps, allocations. Okay, so I'm going to add this in to the stock options trade. It's going to be a new trade here. BABA, buy $1,000 at $99. Add on. I currently have $1,000 allocation at 85.55. I have a pending buy at $61. All right, I'm just posting this in the Pulver alerts. I have a pending buy at $61. My technical measured move on Alibaba is 125 to 130. If we have bull flags or mild pullbacks, I'll look to allocate for more shares. All right, so I'm looking to see if this stock wants to go. I mean, what's nice about this measured move is we take this low to high, and if all this, build up was another higher low to higher high, that is how I got that symmetry right on 129. So all this to me is, I mean, you could look at this and say, well, there's a swing. Well, sure. So I take this swing, I'll box this in. So I take this swing and I project it based on this higher low. It's right around the same price. So whether we're getting this move to this move for symmetry, or we're getting this move to this move for symmetry, that 130 handle is pretty darn good. And if we're going to see some follow through, I for one would love to see 125, 130 hit, and I probably don't care about Alibaba anymore. But that's a pretty good trade in my opinion. So that's where I'm after it, and that's why I've been doing a lot of options near these lows. Lots of options, lots of cash secured puts, lots of income, ratio spreads, everything in here. I did get beat up a little bit post September because we had that big run, took some profit, added in some exposure, tried to keep it out of the way. Had like one loss in here. I did like a 110 by 105. That was in the money. It didn't have any follow through, but I lost like 30 cents on the dollar. It wasn't a big deal. But anyway, if we're getting some follow through here, I think we've got upward momentum. If this is being now labeled and hailed as an AI stock, then who the heck knows what it's going to do? But we could see a lot of positive flows to it, or just some optimism. So there you go. All right. So I'm looking at this measured move. I'm going to take the buy at $99, buy at 85.55, and post that here. I'm looking to see if this wants to go to my swing symmetry. So posting this in Pulver alerts. All right. Okay, that's Alibaba. Earnings today. Let's go top down here. We'll talk some earnings. We'll talk some currencies. Let's look at a little bit of everything. Prices crazy choppy, which is perfect. I was fine. I'm taking the profit on my SPX trades this morning. I've got a nice solid P&L. We have some liquidity levels and market maker levels that I'll be watching very closely today. Don't be surprised if we see the SPY try to go after either a 610 or 600 today. I know that doesn't help for trading because they're both. I mean, if I'm looking at a slightly more important level, I'd say 610 is probably the more important level. But this also is a market maker level. So if we go to 610, I could see us rejecting hard off of 610. If we go to 600 or 595, I could see us bouncing off those levels. So I'm not sure, but that's just where prices are at right now. These are where the big orders are sitting. So I just, as prices really calm and choppy, then I took some premium out of that this morning. That was easy. Okay, I want to take a look at PCE this morning to see what we have on Friday's expectations, because we didn't have anything consensus-wise or forecast-wise last week, and it should be all printed on the calendars now. So 8:30 a.m., here's all of our core PCE measures. So we have PCE in the morning right in here. How do we not have forecasts? I mean, seriously. So core PC month over month was previous 0.1 forecasted for 0.2. I'm looking for core PC year over year, previous 2.8. I don't have a forecast. What the hell? And then we have PCE year over year, previous 2.4. I don't have a forecast. Part of me thinks that's intentional. Like, hey, let's wait for the Fed. And I mean, if you have to go into this week with no forecast, it's like the economists just say like, we don't want to give that information. It could be too disruptive. I think that's a little crappy that you can't even get a forecast here. Let me check another calendar. If anybody has this, let me know. Just let me know what economic calendar you're looking at, but I am not seeing it. So for Friday, there is no year over year that I see here. So you got the 0.1, 0.2 forecasted. Employment cost index, no. What other calendars do we have? Let's go to daily FX maybe. Or my FX book's fine. Let's go to Friday. Thursday, Friday. Okay, Friday, 8:30 a.m. Where's my dollar stuff? Oh, let me switch it over. It doesn't matter. I'll just find it. So it's like GMT. So it's on Euro time. Here we go. Here's the US data. All right. Here we go. So we got some forecasts. This is interesting. Now we have a forecast. So all this news here for Friday. So the year over year, this is not a good thing. PCE price index year over year, previous was 2.4, consensus is 2.6. As we said, higher inflation on every major reading since September. Core PCE month over month, 0.1 forecasted 0.2. Core PCE, which is the Fed's primary inflation gauge, year over year was previous 2.8, forecasted 2.8. The market's reaction is probably going to be tied to these two numbers. The price index year over year and the core price index year over year, right? So PCE and core PCE, this one is supposed to be unchanged. This one is showing a little bit higher. Now, the Fed likes to say core PCE because energy and food prices can be excluded. That's not really a real reflection of inflation at all, but that's what the Fed likes to do. How does the market react to it? Well, it's Friday. We also have Mag 7 earnings with Tesla and Microsoft and Meta and Apple by the time we roll around to Friday's trading. So I expect there to be a lot of crazy stuff going on. But as we've seen, if the market sees that, hey, it's 2.8, it comes in 2.8, maybe they react like they did with CPI a week ago, right? When CPI had a massive gap to the upside or whatever that was, the 13th or 14th of January, CPI was a monster gap up and the market just ripped on that momentum to get to all-time highs in the S&P. But if we come in as expected, is it better or worse? I don't know. Personal spending, PC price index, it's looking to go higher, like 0.1 to 0.3, that's higher. So anyway, at least we have a forecast now. So I'll take a screenshot of this. I think that's something of noteworthiness. Worthiness. So let's go here and take that little chunk. Okay. So I want to take that screenshot and share that. That's going to be something to watch for this week. So we have Fed today with Powell's comments with the press conference at 2:30. We have PCE on Friday. We have Mag 7 earnings. Again, take a screenshot of this if you want. Today, we had Progressive come out with earnings, T-Mobile, ADP, Nasdaq had earnings today. It's probably just a dividend. But after hours is going to be at least a little bit of a sample of Mag 7. Tesla, Meta, Microsoft. I have trades on all these. IBM is a pending order. And I'm looking to see what happens, obviously with earnings. I'm essentially trading both directions. So if I win one, lose one, I still make about a 1-to-1 return on Tesla, Meta. Microsoft, I put in a broken wing butterfly that was filled yesterday. And IBM is a pending order for broken wing butterfly. I looked at Apple yesterday. I looked at Intel yesterday. I looked at MasterCard and VC yesterday. I looked at UPS yesterday. I didn't like the options on any of those. I looked at Caterpillar. I took a trade on Caterpillar. I looked at Southwest Airlines. I didn't like Southwest Airlines. I'm going to watch and see what happens with SkyWest. United States Steel is X. I didn't see that one on the calendar yesterday, but let me take a look. At 36.65. What's the old IV on this one? Premiums are probably not that great. IV rank at 32. Earnings. I don't know. I'm more attracted to the $20 level if I'm going to buy this thing. This would be a potential inflation play. Is it possible for me to own this thing at $20 or less? Maybe. I think that's a long ways off from 36, so I don't really know what I'm going to do on this one outside of just wait. How far out could I go? Could I go to what's a leap? If I did like leap put, let's go 26. So I go to January 2026 and get 74 cents, get $1.30, $28. So if I put on some puts right there, I get $200. That would probably decay down, reasonable amount. I don't have to tie up a ton of buying power. It's an income trade. It's if we stay above $25, which is quite a bit out of the money. If I looked at the expected move here, That is on the bottom end of the expected move, based on $11 to $12 market makers for the entire year. Does steel get more expensive? Maybe. Would I be willing to own this thing? Can I get good enough premium if I did take on any shares? Let me see what a 30-day at the money. I get about $1 to $2 for an at the money strike. My job would be to lower this cost basis down into $20. So if I did a 25 by 23, it's going to be a little bit harder, and it's not worth it. I don't think the premiums are that good. If I was able to go down to at least $20 or lower, if I go, let's see, 2026. Oh, good Lord. I can go to December of 2026, January 2027. Like, that's not awful. But what if price drops to like $8? So it's just, I don't know, just not good, not good enough. All right, anything else on the earnings side? SkyWest, I'll watch. Comcast, CMCSA, that one's been pretty solid for a while. I think this one has its moments. If we come back down to this like $30 level, this is probably a decent play. Offers a solid dividend. Fundamentally, it should be okay. And I'm going to switch gears here to dollar, oil, gold, silver, Bitcoin. Let's get into some currencies. CMCSA right there. Checks a lot of boxes. Reliable dividends, always nice. Price to sales, price to earnings, not super expensive. I like that. Yeah, that's not bad. Not bad. I do wonder, like Comcast, is this like if cable dies, does Comcast lose money? I don't know. I just fully cut the cord. I have no more YouTube TV. I have no more anything other than some streaming services. So I don't know if Comcast is, does it own Peacock, and Peacock has to be like the best streaming service? Do they make money with local television? But it's a solid play at $30. So we do have earnings. I'm just going to set a chart alarm in this one. So let's go out to maybe 51 days. Premiums are garbage. Well, never mind. Nope. I do a ratio spread and have to pay a debit for that. No, thank you. All right, never mind. Okay, let's do some other stuff. Dollar index. Dollar index and the 10-year yield. Watching carefully. Currency strength. Dollar's up, fading. Pound is growing. Yen is strong again. Yes, yesterday's price action for currency strength. Dollar on top. Swiss a little bit stronger as well. Yen is being more volatile. My Japanese yen trade, I've got 6J for Japanese yen futures. I'm long FXY. I'd still love to see the dollar going lower. So I've said this 106 level to 105.50 level. I'd love to see the dollar go a little bit lower. If the dollar is going to be building any type of accumulation or building any type of support, I would see it at that 106 to 105.50 level, and then a trend line break to then maybe build and resume. Now, we don't have to necessarily see full on dollar trend. I mean, this has been a really nice trend. We could have this area for at least a range or a wave cycle. So if we have a wave lower, I'll just draw this out. So if we go wave down, back up again, wave down, that would be an area that I think if you're looking to get long dollar, either this low or this low, you can move some stop losses. If it breaks and goes higher, that's a resumption of the trend. And we've got this level all the way up to like 114. Okay. So that's where the dollar has been. Is it possible it does that? Well, if we have a kind of a sour equities market, then yes, I could see the dollar at 114. I could see a crazy run. If we have a big correction in the markets this year, I could see the dollar getting all the way back to 114, 115. If the dollar comes unhinged, then we can be talking, 120 or so, which would be really, I've said this before, like extremely disruptive in Forex trading to see a one-sided basket trade like that. So I'm hoping that we just see a lot of range trading where this area is a trader's market. And if it breaks and goes higher, then you follow the breakout. But I don't see the dollar necessarily going all the way back down to lows. I don't see the dollar without having a lot of pressure to the downside in equities going all the way up to 114 either. I think we're going to be in a little chop zone for right now. Okay. Oil, I would just stay out of oil. I don't know what, I think there's a lot of pressure to push oil prices down and energy prices lower. We're sitting right at the 200 moving average on the daily time frame. Support at 67. I mean, it's volatile, but I'm like, could you actually do a strangle? Let me check something on CL. If this is worth it, I might look at it, but I don't know. Let's find out. I don't know how much buying power this is. I'll look at a strangle on oil. Let's see how far out I'd have to go. So I've got CL around $81 and around $65. I'll write that down. 81 and 65. So we're trading right in the middle. How far out do I have to go? I'm going to try to get like the optimum decay around like, okay, 47 days isn't awful. $81 if I do a bear call spread. No, that's a bull call spread. My bad. So I go 80 to 81. So let's do a sell and a buy. Okay. So if I went 10 wide there or a dollar wide, it's basically like a 10 wide on like SPX. So 13 cents is 130 bucks. Buying power $600. It's not awful. I'd be looking for a partial profit, so let me add the other trade to it. So let's go 65. 65 by 64. So I get 250 bucks. Ties up $480. It is a 15 delta, like pretty good mechanics on the trade. So the call side is a higher delta. Let's see here. If I go down to a 15 delta, I'm going to take in a little bit less premium, but 81.50 to 82.50. I still make 210 on the trade. That's not a bad trade, man. I kind of like it. Max loss, yeah, I could take on some heat on one way or the other. But if we just stay, in the middle, or we don't have any crazy silly price action, a little bit of chop over like a maybe 20-day window would hopefully give me about a 50% take profit on that trade. So it is, the good thing is this defined risk. So even if price did something silly to the downside or upside, I still have manageable risk on this trade. Like worst case, I lose 800 bucks, but I could also roll. It's a little bit harder to roll with spreads, but possibly I can roll and give myself a little bit more time to keep the trade alive. So let me see if I can get this trade in for 21 cents. Not a bad trade. All right, so I'm right in the middle. 15 delta. All right, try to get 21 cents if possible. So 21 not filling. 20 cent, that's 200 bucks. Filled at 20 cents. All right, not bad. Not bad. 732. And see if this account got its futures. Okay, try this. All right, so I just did that trade for CL. I'll add this in Pulver alerts for the commodity section or future section. So /CL, Iron Condor, a 3/17 expiration. I'm going to go ahead and set like a 50% take profit on that one, and I'll manage it around the halfway mark. So 3/17, it's a sell 81.50 call, buy 82.50 call, sell the 65 put, buy the 64 put, 20 cents credit. Okay, so that trade is in. CL, set my take profit, 50%. Set my take profit. All right, let me set these up real quick. Oops. Okay, and then this account here, 2, 3, 4. That's my take profit. 50%. So get that one posted. I want price to stay below here. I want price to stay above here. So the 81.50 by 82.50 and the 65 by 64. And that would technically be a iron condor. Okay, take a screenshot, post that in Pulver Alerts. Let's get to gold, silver, Bitcoin. UNG going out to 2027. Gold, just shy of the highs. I'm as curious as everyone else. Are we going to break these highs? Something tells me that with this bar count and this move away from the 200 moving average and this same distance away, that we are probably heading into a range. Obviously, this can stay bid and break out, and everyone get all excited that gold's going higher. But I don't think gold going higher necessarily means good things for equities. I think gold going sideways means that we have a lot of chop. Bitcoin goes sideways, dollar goes sideways, gold goes sideways, equities go sideways. That makes a lot more sense to me right now, like technically. Market's got a lot of stuff to digest right now. We got to get through these earnings seasons, make sure Mag 7 is still printing really high levels to justify these valuations. But if we go high, low, equal high, equal low, I love getting some gold back down at an equal low. I keep saying that. I haven't forced any trades on gold. Silver, I did some futures trades, added some SLV. I did a lot of credit spreads on GLD back down here. I bought some shares. I'm still holding some shares. But if it breaks out, I'm happy, right? I'm still bullish on gold. But as far as accumulating more, I want a pullback. I want to pull back towards the 200 moving average before I add some more. Okay. All right. Gold futures, same thing. I want to see some pullbacks in these moving averages. GLD, same thing. Did some allocation, did some buying. Silver. I like silver, trying to head back up towards 32.25. Hopefully a first targeted move around 35.80. SLV, same thing. Have a credit spread. And diagonal spread, I'm long at 15, selling at 34. What does that give me here? Break even price is 28.90. So if I get price up to, I mean, if price gets called away at 34, like I'm making $5. Yeah, I guess $5.10 a share, a contract. I think I put that in for a couple of contracts. Bitcoin 101. This is what I said range wise. We go from this high to this low. We just see some indecision here. I'm totally fine with that. I would like, and I probably will, if we get to 90K, I'm going to add some more Bitcoin. I'm going to probably add in more to my, Bitcoin wallet or my crypto wallet, and I will probably add in more IBIT at 90K and 80K. I like those two levels. So I think we're range bound. So I'm not, I mean, highs are fine. I don't know if I'm going to add more to it outside of just adding more, option plays. But I've got collars on IBIT in case we do have a downside move. But based on this behavior, we had a long accumulation zone on Bitcoin. I think we could do the same type of thing. Just more accumulation here. If there's resiliency, that's probably a good thing. And then we see some risk appetite, then we can break and go to new highs. But I don't know. There's a lot of inefficiency back in that election move. So from 72 to 85, 72K to 85, there's a lot of inefficiency right there that I think the market would be best to check before it just runs hot. So hopefully at least have some sideways movement. If we have some type of pullback here and then a spike lower to try to find this pocket, I'd love to see a pullback where it closes back above and then we get long back to the all-time highs. So patience, but I think there's good opportunities on it for this year. So IBIT got some shares, credit spreads, ratio spreads, collar trades. My collar's at 67 by 40. We're trading at 58. So I might just continue to roll and watch, but MicroStrategy still holding at 336. My collar trade is out to 310 by 240. MicroStrategy also has earnings coming up. It's next week, so we'll see what happens there. I think their earnings should say, we love AI and we own Bitcoin. And the market's like, you guys are the best. And it'll probably go up. I don't know. It might be down because their earnings are probably terrible because they're an unprofitable tech company. But because it's now become a proxy for Bitcoin, who knows? Coinbase still hanging in there, some resiliency, some income trades on Bitcoin. Ethereum, I'm out of right now. Copper, I looked at yesterday. Look, if China goes up, copper's probably going with it. I didn't like the risk profile of copper yesterday when I looked at it, so I'm going to stay out of that. Japanese yen, I'd like to see the Japanese yen get a little bit stronger. I've got this futures trade out to September. I need price to get above 0.00675, which is right up here. So if we have a Japanese yen move, I mean, I thought about this last week when I took the trade, or a couple weeks ago when I took the trade. If we see a bit of a deleveraging at the second half of this year, June, July, August, just like, I mean, I'm not saying it's going to repeat what happened in 2024, but it was pretty wild to see like summer months and kind of some wild stuff happening in the Japanese yen, the Bank of Japan. If we have anything similar to that, like this trade becomes this trade, this reward to risk, make $1,200 to risk about $700. It's favorable. It's not a 2-to-1. But it's close. But I'm curious. And if we see the Japanese yen do this and pull back, I still think this is a bullish pattern. Also, there's finally some currency trading that I wouldn't mind doing, looking at some swing opportunities in the Japanese yen basket. All right. DAX, all-time highs in the DAX. I wish I was freaking trading this thing. It just keeps going up. I don't know if I'd be cautious of like trying to fade it because it doesn't want to stop going up. But this stretch away move does concern me that at some point when this thing does put like the brakes on, this thing like comes to a screeching halt and maybe has like a nasty correction. But for right now, it's not doing anything other than going up. So if you are in the DAX and you're long, I would like to look at trailing stop losses just because I think this is a capitulation move that at some point ends. But I mean, man, what a crazy rip we had since August. It's up 26% since the bottom in August. Let me compare that to the SPY really quickly. What's our bottom in August to now? Bottom in August to now. Oops. The S&P's up 17%. The Dow's up, or the DAX is up 26%. Wow. So yeah, German market doing way better than the S&P right now, outperforming. FTSE back up to highs, a little choppy at those all-time highs. Argentina still looking for a pullback here. China getting some love to the upside. Hopefully we're seeing some more signs of bullishness. Brazil, I'm long EWZ. Let's talk Mag 7. Apple's fine at 237. We have earnings on Thursday. I didn't see any major levels that we're saying one way or the other. We probably have a lot of market maker levels, which I can see here. So I can see Apple getting up into the 240 to 255 zone before the market makers have to step in and defend. I was hoping we'd see Apple like slide a little bit and then make a directional push, but I'm going to see. I mean, I have shares. I've got some ratio spreads. This is what I'm doing on Apple: 210 by 205, 195 by 190. Just collecting some income over the next couple of months. I do have shares. My break evens are like 160, 165, and my cover calls at 225. So I'm not doing anything as far as rolling yet, but I might as it nears expiration. Amazon 238. I might look at another roll or add another collar to this one. Google chop suey, but at these highs, if we break these highs, Google has a lot of room to run. I mean, price wise, this is one of the more inexpensive Mag 7 plays now. After their split, Apple at 230, Amazon 237, Google at 194, Meta's at 600, Microsoft 440, Netflix, Nvidia. I mean, Nvidia's, I guess, your cheaper one, but Tesla. I mean, Google's cheap. So this is why I have a bunch of trades lined up where, yeah, I mean, if we get dips and pullbacks, I'd like to buy some more Google. If we break the highs, I mean, I probably have to have some more Google. It's just, I don't want to buy the highs. So I don't know. Ratio spreads are fine. The implied volatility is a little bit on the low side. We have earnings next week as well on Google. So Mag 7 is really this week and next week, and we'll see how much the market still loves Mag 7. If it wasn't for Mag 7 this week, then we probably wouldn't be sitting near the all-time highs again. Meta at all-time highs. We've got earnings tomorrow after market. I'm sorry, today after market. So if price gets above 702 or 620, above 702 or below 620, I make some money on Meta. Microsoft, I put in a broken wing butterfly. I've got a bunch of ratio spreads down here or 1-1-1s, which I'm fine with. I like that trade for income. I put in a profit trap with a broken wing butterfly that if price jumps up to these highs, I'm essentially trying to pin this thing around 470. So it did fill. Otherwise, it's like a 50-cent credit trade. So if Microsoft just stays here, I make 50 cents. Price goes up and hits this 460 zone. Okay, fine. But 470 is a trap price, and I think that expiration is by Friday, if I'm not mistaken. So MSFT right there. MSFT. There it is. Oh, it was less. Oh, shoot. I thought I made 50 cents on it. 23 cents. Yay. Well, that's not really anything to be excited about, but that's my trade for Friday. A broken wing butterfly with about a $220 profit trap. So that's if I get it pinned. Otherwise, I make 23 bucks. So nothing too exciting. Probability of profits like 91%, 92%, but I've got a profit trap there as well. Okay. There you go, Lee. DAX has been one of my better trades so far this year. I mean, I would hope so. Things up 26%. It's freaking awesome. Okay. All right. I think that gets us through a lot of the stocks. 10-year yield. Obviously, if the dollar's going lower, I'd like to see the 10-year yield go with it. So the lower this can go, the better. I think that's good for debt. I think that's good for mortgages. I think that's good for a lot of things in the U.S. right now with that, very high cost of restructuring, very high cost of debt servicing. Mortgage rates are ridiculous right now. We literally have the most unaffordable housing market ever in the history of the U.S. based on average earnings, based on the median household income. House prices have kept going up and mortgage rates are going higher. So it is a double whammy of garbage that is making the housing market really, really tough right now. Mortgage rates have not budged. They're at 6.96. I need to see this 10-year yield dip. And to do that, we probably need to see a weaker dollar. Bond market, I don't know, looking a little bit better. Maybe there's some more activity by the Fed today. Yes, no, maybe with PCE. Who knows? If we see lower inflation, I mean, honestly, for the market at all-time highs, PCE this Friday, if it comes in lower than expected, I think the market's going to get pretty excited about it, because they might be looking at the Fed cutting later this year, which right now we're looking at a June and October cut for 2025. That's what the probability shows here on the watch tool. Okay, so we have a rate cut expected to be in June and then another one expected to be in October. Then that's a big fat pause all the way into 2026. But if the market can still get one or two cuts this year, I mean, hopefully there's not a lot of disruption, but we never know. But I want to see if the US 10-year can go lower. Everyone's worried about this thing ripping up to 5%. If it gets over 5%, something's going to break. That's my concern. And it's not going to be pretty. And the other thing is it's no longer like normal capitalistic free market. It's heavily Fed manipulated. You got a president now that wants to jawbone the markets every single day and get what he wants. So I know more than the Fed than interest rates, and I want to see a weaker dollar and whatever. Inflation is inflation, and the market's going to be the market. But if the Fed is going to be pressured to cut rates more and stoke inflation, it's not going to be good. Inflation will be something that can break the market, right? If you break the consumer, you can break the market. So we'll see. But right now, if the dollar gets softer and the US 10-year gets a little bit softer, that's probably a little bit of relief. Doesn't mean we can't eventually go up to 5%, but I'd say PC is going to be a big measurement this week because then we'd have officially CPI and PPI and PCE where the chip's fallen. But if this market's going to all-time highs, we probably have to see better inflation numbers for the market to get behind it. Okay, thoughts on US 30. So you're looking at the Dow. We're back up towards all-time highs. I think, again, I'm really cautious of crazy all-time highs. I think this market, if we get back to all-time highs, we're probably going to do something like this. High to low, and just be ready for some volatility. I like longs, but I would rather see if the price is selling, I'm selling income or I'm selling premium for income. If the price is falling, I'm selling income or selling premium for income. I don't think we go necessarily all-time highs. Or if we do, it's not without some type of fake out trade. So I'm just cautious of this market getting a lot of momentum. We've had a lot of steam for the last 2.5 years. You know, when you have a bottom in October 2022 and this thing's gone up 70+%, I think the market can have a phase of sideways, right? I'm not saying it has to be a big, nasty correction, but I'm saying sideways. So anyway, um, I'm not shorting it. Okay. I'm not shorting it, but I want to see if it pulls back. I still have a bar count that I'm interested in on the Dow and the S&P. And based on this stretch away move, and we come back to the same high, we still have a 200 that's attractive. We still have this low of support that's attractive. I think we have a range. S&P, same thing. Nasdaq, very similar. Russell's a little bit different. Okay, Russell. I mean, it looks okay, but there's a lot of volatility on this one where it gets a lot wider. The highs and lows are a lot wider on the Russell. So small cap can benefit, but I like IWY, which is the small cap growth, and it's like 200 stocks. So I'm hoping this one pulls back into like the 225 to 220 zone. I'll probably just toss like a $1,000 or $2,000 allocation to that. I think small cap can really benefit from, you know, AI and tech and this big like Web 3.0 wave that's coming and that's really popular and everyone's getting around it with optimism. Um, Small cap could be like, look, you don't have to be an Apple or a Microsoft or Google to make money. You know, you can do more with less. You can be more productive, more efficient. You don't have to have a $1 trillion market cap. It's like, so I think small cap could be really good. And small cap has been getting crushed by large cap for years now. You know, we had a catch up trade last year, and that was during the election. We ripped up to like 240 on the Russell, but it faded pretty hard. So I think I like this. I like this instrument. I like IWI a lot. Okay. All right. A couple other spots here. Let's go. Somebody asked about the yen crosses, dollar yen. I'd still be watching for some type of price pattern here. So if the yen takes out this low, so if we go dollar yen takes out the low, any type of pullback, I would be looking at, you know, selling, 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 stop above, but it would be defined risk. I wouldn't trust that. I wouldn't trust that high, to be honest. I'd probably want to go slightly higher. This is why I'm trading Japanese yen futures and not forex. Because if the pattern isn't there, I'm not going to put any swing trade on it. But the plan would be something like this. It comes down to the lows, comes back to the highs. The easiest trade would be this: sell, stop, sell, stop, sell, stop, sell, stop. Because if this thing breaks the lows, it's going to be another big fall, right? But that way you can just let price cooperate. Because if it goes back up here, this could be the easiest fake out where it comes up here and then just goes back up to the highs, back up to the highs. And everyone's like, that freaking head and shoulders that you start selling here and you lose. I don't trust the yen. But if we come back down to a head and shoulders and we pull back, I'm just going to sell, stop, sell, stop, sell, stop, sell, stop, and stack them up, measure. Okay. That's my move for profit targets and then get filled if price is cooperating to the downside. Okay. So that's how I'm looking at the dollar yen right now. If it just keeps going higher and higher and higher, then I'm watching this level and I look for this structure to break. And if this structure breaks, sell stops, stack it up, see if it goes all the way down to range lows. So there's no trade that I like right now, not yet. I'm either looking to see some highs to stack in some orders or see a pattern that I can stack in some orders. Otherwise, no trade. Okay, Martin, I'm not that interested in a 1 hour chart, dude, to be honest. I mean, look at this pound yen. What do you want to do with it? I don't care what a 1 hour chart's showing you. Like that's what the pound yen's doing. So you want to trade and grind in there, then yeah, go to your smaller time frames. This thing's chop suey. So we have a high, we have a low, we have a wedge that's building. So it's just going to get tougher to trade it, but you can grind that thing out on smaller time frames. You can look at your little lows and highs and trade 1, 5, 15-minute time frames. To me, the bigger picture is, are we breaking this level or are we going up to retest this high? This is the major resistance point. That is the major support. Until then, you are going to be stuck grinding in between some levels. And that's what a lot of the yen pairs look like. Right? So I'm still in Swiss yen short. I'm up a little bit of profit, nothing crazy, but that's it. Aussie yen. I mean, if we have resiliency in the stock market, we should be holding this level here. I would be watching to see like maybe the Aussie yen holds that level. We just have a range trade again inside of a swing. It's a lot of noise. You know, could this be setting up a head and shoulders this way? Left shoulder, head to neckline, right shoulder. Does it break and go lower? High to low, lower high to lower low? Maybe. But the question is how much you trust the yen. Me, I don't. So I'm probably not touching the Aussie yen. CAD yen, probably staying out of it. Euro yen and pound yen look pretty similar. Just a big wedge, right? A lot of indecision, big high and big low. Pound yen, chop. New Zealand yen, similar to the Aussie yen. You know, I could see this being a fake out level. Just be careful of that. Like if this market comes down and breaks the low and then comes back above, that's probably a buy trade. Stop loss, asymmetry. I mean, that could be a good buy trade. You know, but will it happen? If you watch, maybe. Pay attention. And the dollar yen, I mean, my gauge for the yen in general is probably the dollar yen. If I get a trade that I like, you know, I think I could be a little bit more confident in, okay, the basket would be showing if the dollar yen did something like this, okay, finds the highs, breaks the structure, then the basket, I think it's a lot stronger. So I'd be more inclined to say, okay, I think I could look at basket trading the yen. If I'm right on this trade, I'm probably going to be right on the other ones. But I want to determine, like, is it the dollar that's moving or is it the yen that's moving? Right? And that's the big question mark. And that's always so tricky because we've seen currency time where the dollar and the yen are like in tandem, right? Like they're salsa dancing through the markets. They're strong the same day, they're weak the same day, and there's like no separation between the two. That's a hard trade. So I just think the time in the yen is just wait. Hopefully we get a good setup that's lucrative. But for everyone that wants to be long the Japanese yen, it is not favorable in a negative swap environment to see stronger yen. So this whole idea of the carry trade, it's still out there, but it is losing some of its steam because the Japanese yen is now no longer negative interest rates, but they are now 0.5%, right? If the Fed cuts to 3.75% this year with 2 cuts, I'm not saying this is close. We're still at like 3% differential, but it is starting to make the carry trade less attractive because the Japanese yen may be raising to 1% in the next 12 months. I don't know. And if they do that, this carry trade stuff starts to become a little bit more negligible. And there would be some, I would say, some risk off flows that are coming back in Japan. You know, if you can park money in the Japanese banks and make interest on it, and I mean, if their inflation is lower than the U.S., I don't know. I mean, it's a culture of way more savings than we have, but it's hard to tell. But what we don't want to see is like be on the wrong side of a move like that. You know, that deleveraging stuff that happened all within a couple of weeks in currencies, all within a couple of weeks in stocks. And then it broke over the weekend with that August 5th. You know, futures market was August 4th. August 5th was the open. We had monster downside and the markets just aggressively bought the dip, but it was not without a 10 to 15% correction over like a 2-week period. Okay. So anyway, that's that. All right. It's 11:20. Let me see what else I have on the calendar today. Pretty good. I'll be back in. So, hey, Chandler, Nick, are we doing anything this afternoon for FOMC? Oh, Kenzo's here. My bad. All right, man. Kenzo, you're on, dude. I didn't know I was taking up your spot. So, ladies and gentlemen, stick around. We got Kenzo on next, coming on for more A1 trading. And I think we're going to be streaming all day. It's probably marathon day with FOMC. So, anyway, lots to unfold. Kenzo, you're up. Thanks for being with me, and enjoy the next segment. See ya.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share Edge Finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Good evening, guys. I hope you're doing great. Yeah, it's Wednesday. And yeah, we actually expect FOMC later on. And it's actually a good thing because the market has been playing around, even though a few days ago, Nasdaq, US 30, S&P 500, they were moving very nice. But still, we wanted to know where actually the market is going to go after this, because we've been waiting for interest rates. And this is going to be the first interest rate for this year. I think it's going to open the ways. So yeah, that is going to be very, very important. I checked the market, but we did not really have any move So which means, yeah, we just have to wait for the economic news. So on the comment section, just let me know which pairs do you want me to check. I see Lee James, how are you? I will be checking. Let's see. Just give me any pair that you want me to check. I will be going through that. But if maybe while you're still thinking about the pair, I will be going through some other stuff. But just to touch on the FOMC, this is very important. We know that Trump wants the rates to be lower, and everyone wants the rates to be lower because that will mean that interest rates are going to be a little bit lower. Things are going to be a bit cheaper, you see. But they can't just cut just because Trump said so. Obviously, they have to wait for like events that actually measures inflation, like CPI, retail sales, PCE or PPI, and stuff like that. If maybe all those events are going lower, mostly they will clear the road or the way for Powell to cut the rates. But today, when we check on the rates, it seems like the rates are just going to be the same. So on that, if they don't really cut the rates, is that good or bad? Mostly that question comes most of the time. So if they don't really cut the rates, I think it's way much better than increasing the rates. So cutting the or pausing the rates, it's actually not really that bad. It might be bad for the dollar, but it will depend. If they don't really do anything, I think the dollar might gain some momentum because it means the rates are higher for longer, and maybe the dollar might gain some momentum. So, anyways, I see that AUD, USD, gold, crude oil, Bitcoin, oil, please, GBP, and German 30. Okay, a lot of them. So I think I'm already on gold. Yeah, I'll start with gold. So on gold, this is what we have. On gold, this is what we have. So gold has been actually going higher, which is good. Remember, guys, remember the tensions in the Middle, sorry, not in the Middle East. In the Middle East, likely enough, the tensions are now like a little bit cooled off because I think they reached ceasefire. But Russia, Ukraine is strong. It seems like Russia is winning the war and stuff like that. But I think the best thing is tension still continues. We will see gold continuing to go up. But today, exception of for today, we can say today we're just waiting for the news or FOMC. There is a chance that the market can respect this level and push even lower before maybe going up, or maybe that will be the start of that sell-off. But at the moment, we are still on that nice uptrend. So which means we are just going to focus on this resistance area. As long as the market is not breaking that level, it means we might see the market respecting this level before going up. You see, I'm expecting gold to continue going higher if tensions are still continuing. But with the economic event that we have later on, things might change. I don't really know what will happen, but what I see here is it seems like we will see a reversal before going higher. I think maybe that makes sense. So another pair that you want me to check, it's AUD USD. I think my network, guys, it's not really good today. So let's check which pair. Let's check the pair. AUD, 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 USD. USD on my side, we can see that we are coming was slowly on. But now we have this breakout. So on this breakout, obviously, we expect the market to continue going lower. So which means at the moment, we can say we are on a downtrend. Plus, what we know is we expect the market to continue with this downtrend structure. So at the moment, we can say we can draw something around this level. I think that can be something. And maybe on the bottom side here, because we expect to continue going, create a nice downtrend going further. So yes, I'm expecting to see the dollar going stronger. So slowly, I'm expecting a continuation of that downtrend. Remember tariffs, guys, it seems like they're going to boost USD. Trump did stop so many things, so which means all that money will be going back to US economy, and that will boost the dollar. So which means the dollar will be stronger. So which means I'm expecting to see a continuation of that sell, something like that. I hope that makes sense. So someone said check crude oil. So let's check crude oil. Just know that they're not really the same. I think it's the same thing. If it's not the same thing, just let me know. So on crude oil, we had a structure like this. So you can see here, we wanted to have a buy pending order. So the overall structure, it's actually a downtrend structure. So we were expecting the market to continue like this, but the market broke out. Once the market breaks out here, obviously this means that we were expecting to see a continuation of a buy on this US oil, but the market seems to be bouncing back very quick. So the question is, will the market continue with the previous trend, or maybe the market is just playing games? I think the best thing here is to wait. Is to wait a little bit and see if maybe we are going to see a continuation of that sell or not. But what I know is, as long as there's no tensions in the Middle East, we are going to see affordable oil. As long as maybe Russia and Ukraine oil Russia war stops, obviously we're going to see some affordable oil, because those countries, Russia and some countries in the Middle East, they are like the biggest manufacturer, the biggest producers of oil. So which means if tensions are going to slow down, we are going to see oil prices going down, because they will be producing more. But with the structure here, I think we just need to wait a little bit and see what is actually going to happen. Going to continue with the previous trend. If that happens, we just have to wait. Maybe the market will continue with that trend. I hope that makes sense. Which is Bitcoin. I saw Bitcoin, it was going up a little bit. So Bitcoin, I think it's still quite the same as before. So you can see that the overall structure here, it is still that uptrend. The market is actually pushing to the upside. So I'm expecting the market to continue like that. But at the moment, I can actually go closer and try to see what's really happening here. So we can see that we had this nice breakout up. And if we check this ranging structure there from March until November, so that is a lot of, like, it's more than 6 months. So here we see another move where the market seems to be trying to recreate what we saw before, which means there is a chance that the market might just play around here for more than 6 months before we see a proper move. Or maybe the market will just go aggressive and break out of the structure. We have this resistance, so the best thing that we can do is to wait for the market to break the resistance before we do anything, you see. But the best thing is to, let's just wait and see. The overall structure is, it's actually still on that uptrend structure, but we can't just jump in anyway. So the overall move here is, I still believe that we are going to see some very nice bullish moves. I hope that makes sense. So let me check another pair. I did US oil, GBP USD, GBP USD, GBP USD. Where's GBP USD? GBP USD. Yeah, on GBP USD, we have a proper downtrend structure here. So which means I'm expecting the market to continue going down. We also had a sell pending order, as you can see there. So which means the overall structure here, it's actually downtrending. And I'm expecting to see a continuation of that sell. Plus, later on the FOMC, if the dollar becomes stronger, this position will be much better if the market continues to go lower, which means the dollar will be stronger. If we see a breakout, it means that the market will be in favor of GBP. So, which means maybe the dollar will be weaker. But remember, when we check FOMC, the most important thing is the conference. Later on, when Powell is going to be asked some questions, listen carefully. Whatever that is going to say, whatever that he is expecting, most likely is going to control the way the market moves. If he says, okay, things are still looking good, we are still looking, like, let's say, to cut the rates maybe next month or the coming events, that might be some good news. And you have to know that you will see that actually mostly on the market. You will see the dollar starting to gain some momentum. But sometimes the market will react a bit slower, let's say maybe after a few minutes or even an hour. Then it's where we're going to see the market start to move. The best thing that we can do now is to listen to the conference. Mostly if they say they're going to pause the rates, yeah, that is fine. But what are we going to expect next? What will happen next? And that's what we want. So I'm expecting everyone to do that, but it's 30 minutes after the news. So here on GBP USD, we have a very nice downtrend structure. So if US is going to be stronger, it means we are going to see a continuation of that sell. And yeah, it might happen. It might happen. Mostly the market will act the trends that we have. German 30. German 30. Let me check German 30 for you. Let me check German 30 for you. Sorry. German 30 is flying, guys. German 30 is flying. So we have a very actually on that uptrend structure. So remember, we saw the market selling here and there on the US market, but on German 30, we don't really see that. Why? Because Germany doesn't really have those crazy big AI companies. We'll talk about DeepSeek, but for now, German 30 doesn't really have much here. But the overall structure here, we can easily see that the market is actually on a very nice uptrend structure. Here it was a smaller resistance. I was expecting maybe the market to reverse. I saw the first reversal. On the second one, I thought maybe the market was going to reverse, but it seems like the market wants to continue going higher. So with this type of a structure, once the market breaks out of this resistance, then it's actually good to look for that buy. I hope maybe that makes sense. That is actually good to look for a nice buy. But remember, watch here, the market it's actually overbought. So which means buying here, it's also a good idea because it seems like the market might continue, but you will be buying at the highest level. So there is a chance that the market can reverse. I hope that makes sense. So you have to be extra careful here. I'm not saying that the market won't go up, but I'm just saying that be extra careful because this will be a little bit highest level, then there is a chance for a quick reversal. So be extra careful. Plus, let me know other pairs. Which other pairs do you want me to check? I see Nasdaq. Let's see. Nasdaq, CAT JPY. Okay, Nasdaq and CAT JPY. I will check that. Let's go on Nasdaq first. Nasdaq. So on Nasdaq, we have a very nice structure there. We can easily see that the market was actually on a proper uptrend structure. If we go on this 4-hour time frame structure, let me remove this. So you can see that the overall move here, the market was just showing us that it's going up, it's going up, it's going up, it's going up, it's going up. You see, that was a proper uptrend. Then guess what? Boom, DeepSeek. DeepSeek came with some results, and guess what? That she did have like some serious impact on the US tech stocks. And then we saw the market melting so bad. And at the moment, we don't really know if maybe this sell off is actually done, because if you follow the story of DeepSeek, it's another model, AI model, which operates quite similar to OpenAI, or let's say ChatGPT. But the story behind that, they say for them to actually achieve that, they used a fraction of ChatGPT budget or resources. So, which means, let's say, if ChatGPT used 5 billion, DeepSeek maybe used 6 million. There it's too much, like way too lower. So obviously, if you are an investor, you will think twice that, oh, it means that all these companies, if maybe you're buying, let's say, Nvidia, you'll start to realize that, okay, it means that all these AI companies, they don't really need those AI GPUs and stuff. You start to think twice. And if you're investing in that, you will know that, no, this looks bad, because if DeepSeek continue showing off some stuff, that is going to be bad for most of these companies. I think we're going to see some serious reversals, especially almost all companies are trying to adapt this AI bubble. It seems like it's busting. And DeepSeek, it seems to be the first thing to expose all of this bubble. You see, so I think at the moment on Nasdaq, S&P, we need to actually be extra careful. But what we have now is, after we had that a nice uptrend, we had an aggressive breakout. So what we have, we can say we have a nice support there, resistance there where the market broke out. So now it seems like the market is trying to reverse. So the most important area, it will be this area of a support. Maybe the market will touch that before going up, or we can say, let's wait for the market, then we will see what will happen. You see, so yeah, on the comment section, whoa, that's too much. That's too much. I don't know if who gave you the keyboard. This guy. What's your strategy? Galeta. My strategy, it's a trend following, but yeah, that is too much. That is too much typing there. So yeah, I follow trends. So I'm a trend follower. So which means I don't really go against the trend. So like now, if maybe the market says we are on an uptrend, I will try my best to go with the trend. So which means when we say we go with the trend, I will actually look for buy positions. Yes, somehow I can scalp a sell, but most likely you don't really have to do that. You can just go with the trend. You're actually looking for a buy, trend following, you see, or trend trading, you see. So anyways, yeah, let me see other pairs. I see CAD JPY, USD JPY. Okay, let's try USD JPY and CAD JPY. I think I forgot about CAD JPY. We can start with that. CAD JPY seems to be selling. to a support area. It seems like we are on a support area. Yeah. Yeah, so on CAD-JPY, this is very good. We can see that the market here be on a daily time frame. Okay. Yeah. So on CAD-JPY, this is a very nice structure. This is a very good structure. So we can see that we had the start there, second point, third, fourth. So we see that the market is moving like that. So this is a very nice uptrend. So where we are now, we can see that the market actually reached this level, 1, 2, 3, maybe 4 candlesticks, or let's say 4 days. So I'm expecting to see the market going higher like that. Or maybe there is a chance for the market to break out. But at the moment, I think the evidence shows us that there is a chance for the market to push higher. So for you not to just jump early, you can maybe say, you know what, I might place my orders around this level, not closer, little bit far from that, and say, you know what, once the market bounces back, it will find my order there. So you don't just jump on this support, because what if the market continues to break? So the best way is to let's wait for the market to reach this level, then it's where you can look for that buy. Plus, you can go on a smaller time frame, 1 hour, 15 minutes time frame there, then that can actually show you where you are. Maybe you are too close, or maybe you need to be a little bit far before you place your orders. I think that makes sense. New Zealand USD. USD JPY. I think let's go straight to USD JPY before we go on NZD. So I think on CAD JPY, everything is quite straightforward. So let's go. Let's go. New Zealand. Let's see. Do we have New Zealand? Yes. Okay. On New Zealand, it seems like we've been enjoying some sell position, a downtrend structure. So this is what we have. Yeah. This is supposed to start there. Let me remove that. We smashed that. So on New Zealand here, I think it seems like if you check this, guys, as we have FOMC later on, it seems like most of the structures aligned very well with this notion that we can say USD is going to be stronger, because most of the markets are around this resistance. The other ones, like USD JPY, they are on the support area. It's like they are ready to shoot up. Here on the opposite side, it seems like the market is ready to shoot. It's like the dollar is going to be stronger. Do you see that? So, but we will see. We'll have to wait and see. So what we have on New Zealand USD, the market is showing us that we are on a very nice downtrend structure. So we expect the market to continue going lower. So yeah, I'm expecting to see a very nice sell, but we were supposed to get it around this level. We were a bit late, but it's fine. We're not really that crazy late. I think the market will continue going even lower. I think we are going to see a continuation of that sell. I'm expecting to see a continuation of that sell. But you know what? Since we're going to have some economic news, I think it's better to be extra careful. Don't just jump in, wait, calculate your things, and make sure that if you get in, you're not gonna maybe blow the account or lose anything. I hope that makes sense. So now let's go straight to USD JPY. We did go on gold, but you know what? We will go back again. So let's check USD JPY. USD JPY. USD JPY. Let's see. So this is what I was talking about, that the market seems to be aligned with USD being high. So at the moment, we can see that we are on a very nice uptrend structure, by the way. So here we can see that every time once the market touches our support, we expect to see the market going higher. But if things don't go the way we want, it's obvious that we're going to see maybe a breakout. But as long as the market is still respecting our zone here or our support area, we will only think about buying. Easy as that. And it seems like the market is playing around that support area. So which means we are supposed to look for that buy position. As long as the market is moving away from this support area, we'll look for that long position or buy position. Simple as that. You see, so I think that is going to be something that we are going to look at. We have this resistance there, but still we are on an uptrend, so which means the market can break that area very, very, very easy. So yeah, I think this is also a very good zone for us to look for that buy, as it seems like the market will be continuing with that. So what about gold? I did check gold, but I can check it again. Let's see. CAD JPY, I did that. Euro USD already went up. Okay. GBP CAD, okay. Let me see another pair, guys. Please send another pairs that you want me to check. I will be checking gold and the other ones, but I see GBP JPY. I will send that. I will actually check that, sorry. So now let's check GBP JPY before we go back on gold, because we did check gold again. Let's see what's really happening. GBP, okay. This looks good. GBP JPY, okay, this looks good. Let's remove that. We did smash that. So with the structure that we have here, we can easily see that, yeah, after we had this aggressive sell-off, the market started to create a proper uptrend. You can see there where the market shows us that this is a zone or a support area that it's actually respected. And you know what? The market actually did not really disappoint us. We see the market respecting that, and we expect to see the market continuing going higher. And that looks good. Unfortunately, here, for those who just want to jump on the market, I think the market already moved a little bit away from this support. So the best way that you can do is to wait for the market to reach this support area before you look for that buy, or the market might create some structures along the way that we can use, but still inside this trend, you see. So the market might create that, then we can continue buying. But at the moment, we just have to wait and see if maybe something happens. If you missed that move, you have to wait a little bit, be patient, and yeah, maybe a nice opportunity will be coming very soon. So gold. Let's see, USD Canada. USD Canada, is US 100. Let's see, USD ZAR. Okay, so I think I see USD ZAR, AUD USD, I did that. US 100, I did that. Let's see, USD CAD, I also see that. Let's see, let's start with USD CAD. Then after we're done, we will be going back to on those pairs that we did cover and see what's really happening. So let's see. I see someone said support and resistance, it's like not really good. Guys, we have these different experiences and we learn differently. I might still use support and resistance and it might work for me. So the way you use it is not how the rest of people or traders use support and resistance. So sometimes people, they like to expose themselves. They try to say, oh, this is bad. Just say that doesn't really work to me, not to everyone, you see. So anyways, now we are on USD CAD. As I repeat, I follow the trends. So here it was another trend. So the trend was quite straightforward. we have this nice support area and it's still very strong. We did smash this one, by the way. Let me remove that. Guys, if something doesn't really work for you, it doesn't really work for you, not for everyone. So make sure that you retest whatever that you're using. So things like support and resistance, they work very nice, but it depends. What's your strategy? It doesn't really mean that just because I'm using this support and resistance, it means we're using the same strategy. Like here, if I'm using this resistance, it doesn't really mean I need to sell there, because my strategy says we are on an uptrend. So which means the most important thing here is going to be my support, because I need to look for those buy positions only. Simple as that. I hope maybe that makes sense. So if you are a trader, it's way much better to think outside the box. Not every trader, not something that sounds like you, the one that you're using, if maybe on your side it's not working, it's like everything is garbage, you see. So anyways, let's continue with USD CAD. We can easily see that the market showed us that we are on this nice uptrend. Guess what? We followed the trend. So likely enough here, the market showed us that it was consolidating. I can say yes, even now the market is still inside this consolidation structure. So for us to continue with this aggressive trend, the market has to break this. The market has to break this resistance, then we can continue buying. Or maybe the market might try to reverse here and there. And if it reverses, it will be fine. We will be looking for that buy again as long as we are on that nice uptrend. If the market breaks out, that will be fine. We will be looking for sell positions or a downtrend. But at the moment, the market is still showing us that we are still on that nice uptrend. Simple as that. So Nasdaq 100, I think I did Nasdaq 100. I will be going back to everything that I did cover, but for now, let me go straight to the ones that I did not really cover. FX Capital, thank you very much. So let's go straight to USD ZAR. USD ZAR. Yeah, you know, guys, on the market, or let's say in trading, is to the best thing that you can do is to learn from one another. Don't strategies better than someone else, 1, 2, 3, or maybe anything's just the same. No, we learn differently. We get information from different sources. So not everything's just going to be the same. We might pronounce them the same, we might call them the same, but it doesn't really mean it's the same thing. So now we are on USD ZAR, or USD South African Rand. So the overall structure here, it's just nice uptrend. So we can see that the market consolidates, push up, consolidate a little bit, push up. Here the market pushed lower towards our support area. And yeah, as we know, the dollar is a bit stronger. Maybe the market will be coming back to the support area and continuing. So someone can say, why did you draw something like that? Because it makes sense. There is nothing much there. Or you can still use your straight line. It's still good. You can draw something like that. It makes sense. But I like this curved line. It also works, you see. So you can use whatever that works on your side. Plus, I understand what's really happening. So this area of support, you can see it was a previous resistant, nice support there. So there is a chance that the market can still play around. So which means I can still change this and make it straight. But for now, things are still respecting this level. I hope maybe that makes sense. So it's a bit slow. So at the moment, we are still on that nice uptrend structure. So I'm expecting to see a nice push to the upside. I think later on, we are going to see a continuation of that buy. I think we are going to see that continuation of that buy. I hope maybe that makes sense. So USD CAD, please. I think I did USD CAD. DXY. Thank you, nailing the accent. Okay, thank you, guys. So now let's go straight to Nasdaq. Or let me just cover the ones that they don't really like to comment that much. I will start with S&P 500 this time. I think we can go on 4 hours time frame. So let's remove that. We matched that. So we had this smaller move there, which the market was showing us that it seems to be a quick downtrend, but the market quickly broke out of that. So at the moment, you can easily see that it seems like the market is just waiting to reach this level before going higher. And for the market to reach that, it means we have to have stronger dollar, you see. Or if maybe DeepSeek conversation still continues, we might start to see the market melting. That is possible. That is possible. I think investors are still chewing or digesting the news, DeepSeek news. Some they start to say they distilled information from OpenAI or ChatGPT. Who knows? We will know when time goes on. But at the moment, it seems like, yeah, they can do something better with small, or they can have much better open source AI with less. So on Nasdaq 100, it's actually, or let me say, first thing first, before we go on the overall structure, I can say we are on a ranging structure. Let me remove that so that you see. First thing first, where we are, we can say, let's draw this. And on the bottom, we draw something like that. So where we are, we can say the market is actually on the ranging phase, even though the market shows us that it's moving aggressively, but this is where the market just move in a horizontal form. So which means we are not on a trending form. So the market is just moving around the same level. But if we zoom a little bit out there, you can see that the overall structure, we are still on that uptrend structure. Do you see that? So this is a proper uptrend. So if you are closer, you might think maybe, oh, the market might sell. Yeah, the market might sell, but the overall structure here, or the trend, it is still that nice uptrend. So which means don't get confused with that. So now we can go closer. Once we go closer, we can see that, you know what? The market created a very nice move a few days ago. We can redraw this support area there. So what I see here is, as we had a support area, the market actually showed us that, you know what, we need to change the trend. We're no longer on that support area. I think the market might come around this level and try to test this area, maybe before we see another push to the upside. I think that it's possible. Plus, we saw an aggressive push to the upside without any reverse or any bounce. So now I think it's a good time for the market to do it, to come back and retest here. From there, we can have a very nice buy. And likely enough, today we have some economic events. Maybe this process will happen very quick. Maybe the market will reach this area very quick. We can jump on a buy. But sometimes it's difficult just to jump before the news. Yeah, you can still jump before the news and get it right. But with the FOMC, the most important thing is going to be the conference. Then from there, we will understand what will happen. Or the conference might also disappoint sometimes. It might also disappoint. And you might find that they don't really say much about cutting the rates, because the most important thing that we want is for them to tell us that when are we expecting the rates cuts. Besides that, I think it's not going to be very nice. So I think my time is up.
Hey, Kenzo. Yeah, thanks for helping out and streaming with us today. Guys, if you enjoyed Kenzo's commentary and all that, we just dropped his link in the chat, so you can go subscribe to his YouTube channel so you can find more of Kenzo there. Yeah, Kenzo, thank you again for coming on today. We've got our next guest waiting, and we'll see you back on Friday.
Thank you very much, man, and also your viewers.
All right, guys, we're going to be right back here with FOREX James right after we take a really quick break.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How is everyone doing? Hope you're all good. All day stream for FOMC. Yes, it does seem like it. So you can always see, if you go into the A1 show here, you can see all day FOMC press conference started at 9:15 all the way up until 3 p.m. So the A1 guys have got a long day ahead of them. Oh, well, I guess they're almost done actually, but props to them. You'd never catch me working all those hours. Guys, someone called Daniel just put a scam in the chat. So anyone that might be a little bit gullible, don't fall for it. Tom, good to see you. Hope you're good. So in terms of markets, the only thing I'm really looking at the moment is coffee. Now, coffee isn't something I pay attention to that much. In fact, I don't pay attention at all. The only thing that's driving me is actually some information that one of the, my trader at Elite Traders put in for us. So apparently we're having quite a nice situation to buy coffee at the minute. We've got geopolitical tensions, supply risks, reduced output. We've obviously got tariffs as well that are being applied by Trump. So it's presenting a good opportunity to potentially capitalize on some high demand for coffee. So I'm looking to buy around the 344 level. So we'll see how this goes. There's no entry at the minute, but you can see on the daily chart up here, it's been on a rocket ship to the upside. So looking for that to continue. But anyway, let's focus on FX. So the US dollar seems to have recovered, or almost recovered, quite nicely from the drop we've had recently. So nothing too concerning with the dollar. I'm still thinking we're going to have more of a neutral, slightly hawkish, possibly tone from Powell today. Later, we've got, is it 2 hours? 5, 6, yeah, 2 hours until we've got FOMC. So we'll know then. So yeah, I would expect the dollar to continue rising overall. We might see some short-term choppiness, but yeah, the fundamentals, as far as I'm concerned, are still very bullish for the US dollar. I would expect the euro, the pound, and the yen to continue weakening. I think the yen's had a pretty nice period over the short term due to the risk-off sentiment we saw recently when we saw the VIX spike. But yeah, I'm not convinced that that's going to be sustained for very long. Obviously, the yen's done okay off the back of the rate hike by the Bank of Japan. However, it's not enough, in my view. It's not enough really to change the course of the yen. I think the easiest and the most obvious path is to continue down over the long term. So we'll see about that. What do you think about Australian dollar, US dollar after a US CPI? The Australian dollar is in the bin, to be quite honest with you. It's definitely not something I'd be buying right now. So let's see. Yeah, I mean, the daily's down, weekly's down, H4's down, H1's down. So yeah, I mean, obviously you'd be wanting to short this market. The US dollar, as I already said, I'm pretty confident that the US dollar strength is going to continue, especially now we've had slightly more signals from Trump regarding tariffs. Nothing major. We've not really seen any action yet, but you know, he reinforced it, which is enough for me to be confident that something's going to happen. Son of a gorilla, hello. So yeah, I'm completely fine with continuing dollar longs. Maybe looking for some sort of pullback. However, so actually, let's look at the fib. Let's see if we could find a potential entry. So somewhere around here makes sense for a possible break, which we've had. Look for the retest and then continuation to the downside. I would suggest is probably the easiest path. So yeah, I mean, again, why would you want to try and fade this downside move? So yeah, I'm completely fine with that sort of idea, to be honest. Adam Rogers is asking me about my FX book. I'm moving to spread betting, Adam. So the reason that the my FX book equity has dropped is because there's still positions on there while I've been pulling capital out. So I'm moving to spread betting for tax optimization because capital gains here is capped at 3K, and I exceeded that on the CFD account. So it makes sense financially for me to do what is obviously tax free. So that's that. You liked my gold idea going 2762 and returning now due to Fed meeting. I can't remember what you said about gold. Let's see. So you were saying 2762. Oh, I see. Actually, I don't see. I'm not sure what you're talking about, Gorilla. Yes, the track record will still be public. There's nothing on it at the moment. I think there's like £100 profit, but there's nothing to show. And as I said, I'm still allocating capital. So once my accounts are flat, once the CFD account's fully shut down and I've fully transitioned over, then yes, everything will be public again. But for now, I'm just having a transition period. I'm not in dollar CAD, no. And the reason I'm not in dollar CAD is just because oil's throwing me for a little bit of a loop here, to be honest. I am still bullish on oil. But there's also the factor of Trump that's kind of given me a red flag, to be honest. Again, there's not really been any action in terms of what Trump wants with oil. Obviously, he wants to drill baby drill in the US. He wants to buy Greenland. And he wants OPEC to reduce prices. So that's three things that, to me, obviously are very bearish. So I'm not looking to get heavily long on gold. I might go in for a very aggressive entry around here, just based on very basic fundamentals. Obviously, OPEC's continuing the supply cut, and we've got a pretty strong level through here. So I'd be quite happy to buy, but with low risk. So I'd probably take this one at 0.5 to 1% risk. But looping back to what you actually asked regarding dollar CAD, if I'm expecting a stronger oil, that means I'm also in turn expecting a stronger Canadian dollar, which, is causing this sideways movement because we've got a little bit of a fight here. Obviously, we had a very strong oil for a short period, bolstering the Canadian dollar, but we also had a strong US dollar giving us this horrible sideways range. So yeah, I'm kind of not interested in dollar CAD, to be perfectly honest. I'm in dollar Swiss here. So this trade, obviously, again, it took a bit of a hit when we had the US dollar selling pressure. Took New Zealand US dollar. Now, this was a copy and paste trade from HSBC. They took this they took the same trade with a slightly higher entry. So I decided to be tactical. So I've also got pound dollar shorts and I've got dollar Swiss longs. So I'm exposed to the dollar long side. I actually got out some EU shorts this morning as well, but so the New Zealand US dollar long position just hedged that risk a little bit. So if we do see the US dollar continue to the downside, at least I've got a trade on that is in favor of that. So that was more of just some risk management positioning rather than a speculative trade. I'm actually pretty bearish on New Zealand dollar. I do feel like selling gold. I don't know. I'm really mixed on gold. I don't like to sell it typically. I think Nick showed it earlier, actually, that the fundamentals on gold aren't really very compelling. It's more bearish. So that does more make me want to go short, but do I want to short gold? Not really. So I think I'd continue to wait for this setup here where we come down, retest previous structure, and then try and look for this break and retest. But yeah, at the moment, there's nothing for me to do here. Yeah, no problem, Adam. EU's completely closed. So I got out of that position this morning. That was one of the positions on the CFD account. Actually, I'll see if I can show you. I can't seem to show you on here. I'll show you here. So yeah, closed, difficult to censor. Closed EU this morning. And I've still got the euro pound positions running. Again, this might be a little bit difficult to see. that way. So I'm just waiting to get out of euro pound, and I'll be completely done with CFD trading. I'm not doing Bitcoin. I've got a ledger, so I've got a stack of Bitcoin that I'm just holding. But yeah, I don't actively trade it. I don't really care what's going on with Bitcoin. I've got it more of just a, see what happens type thing. So I buy some every month. It's just like an investment. So I'll buy some every month and just wait and see. If it spikes to 1 million one day, perfect. I'll cash out. If it doesn't, fine. Whatever. Bashi, you only take buys on gold? Yeah, it's kind of the same for me. Wouldn't be selling gold while the institution is buying. Well, I think there is potential for gold to go down today or tonight, wherever you are, due to FOMC. Obviously, the Fed comes out quite hawkish and quite reinforcive, quite positive about the US economy. Then, yeah, we will possibly see downside on gold, but it's not, that's more of a gamble, in my opinion. You're placing a bet on what Powell's going to say rather than it being a well-built trade idea. Pound dollar, Karen? Yeah, okay. I'm in pound dollar, actually, here. So yeah, this trade's so far so good. We're having a little bit of a play around ahead of FOMC, which is to be expected. So took a very simple trade here on the retest. So obviously we've had previous structure throughout here, very simple stuff. We had the retest off this break. So yeah, all good. I've reduced the stop loss by 50% here, obviously just to be safe during FOMC. If it doesn't go as planned, which obviously if it goes as planned, then it would benefit this trade. But if it doesn't, then the stop loss has been reduced. So it's no issue at all. So yeah, we'll see how this one goes, but very straightforward. Overall, I'm still very bearish on pound dollar. We did have some news today, actually, that sounded quite positive, but it was just words. It wasn't anything that was set in stone or anything that really means much. It was Rachel Reeves was talking about building another runway in Heathrow to boost the economy. That's a bit pathetic. We've got, she wants to work with the US to build the UK financial health over the next few years. So there's some optimism, but at the moment it's not enough for me to be bullish on the pound. It's only going up because of uncertainty of Donald Trump's claims to end the war. I think it's just uncertainty in general, to be honest, Gorilla. I wouldn't say specifically the war, because if he does end the war, that would be more pressure to the downside on gold rather than upside. Break and retest is so reliable. Yeah, I love a break and retest. It's like one of the main entry criteria I have. 1.2 is the bank forecast. Yes. Last time I checked, anyway, they're still looking at 1.2. Actually, MUFG, which is an institution, have a short position on pound dollar. Their take profits at 1.2. She's a dummy. Yeah, I think she. Yeah, I mean, I don't know. We'll have to see. We'll have to see what happens. I do see Donald Trump cooling attention. Yeah, I do agree with that. And this is going to sound horrible, but I'm talking strictly from a trading perspective, not from a humanitarian perspective. The war in Ukraine is beneficial for me at the moment because of euro-dollar short. So if the war in Ukraine is put to an end and there's a complete sort of peace agreement there, the euro will benefit substantially from that, which actually could be a catalyst to go long euro-dollar. So something to pay attention to. In fact, I've got no exposure to euro-dollar at the moment anyway, but I think euro-dollar will be an amazing buy opportunity at some point. So I'm just planning for that now. I couldn't do her job. Absolutely not. I think this is one of the problems actually with people. They see politicians and all these people, whoever it may be, saying certain things and taking certain actions. And these people have been, they've studied, they've applied for the job, they've got it, they've got experience. They do what they can normally anyway. It's not, and then you'll have Barry, your next door neighbor, saying, oh, she should have done this, I would have done that, this would have been a better idea. It's like Barry's got no idea how the economy works. And to be honest, neither do I. I've got, you know, I know the basics, but there's no way I would be able to be one of those people. Anyway, so I'm on here for an hour, so you've got me for a little while today. So let's see what's going on. Let me pull up the Edge Finder. Oh, I need to give me a second. I need to push that to the side, pull this up. So we've got the Dow. Actually, I forgot to talk about the Dow. I'm looking to take a long position on the Dow Jones at some point. Not yet, but I'm looking possibly down here at 43.9 or 43,900 if we can get to that. So again, if we can see a pretty hawkish Powell come out, which we'll see, but if we can, likely we'll see the S&P. Likely we'll see the US 30 or the Dow Jones start to trend lower. And that would give me quite a nice opportunity to scoop up at a relatively low price and continue this gravy train that we're currently on. I think that would be quite nice. I mean, we've almost, in fact, we have completely corrected this whole move to the downside. So yeah, just looking for the next pullback really to get into the Dow. We've got Nasdaq is very bullish. I'm a bit hesitant about the Nasdaq. We've got earnings later today, and we've also got oh yeah, the thing with DeepSeek is giving me a little bit of a nervous feeling regarding tech, so I'm just staying away from that a little bit at the moment. Bitcoin, I'm not interested in actively trading that. Dollar CAD, I've got an icky feeling about that because of oil. Don't trade the FTSE. S&P 500 could be okay. Copper. I think Euro Australian's a good one. Actually, I think there's potential there, especially with the weaker with the weaker Australian dollar. And yen crosses are very bearish as well, which is interesting. We saw that yesterday, and yeah, I'm not super convinced about the yens. It wouldn't be a huge shock if they do continue to move down. It's just I'm not convicted enough in that idea, really. Oh, refresh the Edge Finder. Good idea. Probably should have done that. Let's see what we've got now. Basically the same. Yeah, basically the same. Hey, Nathan. I've done pound dollar already, so feel free to rewind, but thanks for asking. I'm good. How are you? Would be weird if Fed wouldn't cut rates because of good economic numbers. Oh, would be weird. Okay, yeah. Well, Trump's not happy with the inflation at the moment, so I think that's why he's pretty determined on the rate cuts. But again, he's not as smart as Powell, or he's not as glued in as Powell is in terms of the economics. So I would be pretty confident that Powell's basically going to tell him to F off. Obviously, in a nice professional way, he's going to say that we're not influenced by Trump. We're going to continue doing what we're doing, blah, 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 blah. Nathan, you don't need to apologize, my friend. It's all good. It's good to see you here. Gold. Yeah, we've done gold. I'll go back to gold shortly. I'm just reading what you guys are saying. Okay, well, someone else. Okay, we'll just do gold again then. Yeah. So as I've been saying, there's not much regarding gold. So let's check here. So the only thing that really catches my eye is seasonality and positioning. So we've got the COT data that's very, very long on gold. We've got seasonality that's very bullish on gold. Retail positioning is also very long on gold, which, to be honest, on gold doesn't mean much to me. I mean, most people only buy gold these days. GDP, not really great for gold. We've got manufacturing PMIs, not great. Services PMIs, not great. NFP, not great. Unemployment rates, not great. So yeah, there's just nothing really that piques my interest. So I'm quite happy really to just sit on the sidelines of gold and wait to see what happens. After FOMC, maybe I can build up more of a picture. You know, again, if Powell comes out quite dovish, then maybe I'll be interested. Or if he comes out hawkish, maybe I'll be interested. But for now, definitely just sitting flat. Mainly, again, just because we've come into previous all-time highs and had a relatively strong rejection. So I'm, even technically, on a technical perspective, there's not much there for me. We want good job numbers. We want good GDP and inflation. We are getting so let's cut rates. Hey James, what RSI indicator do you use? That's exactly what it is, an RSI. So it's just relative strength index, and these are the settings. So I use a length of 8. I don't use the calculate divergence, and I use an upper band of 80, a lower band of 20, and those limits along with this length just give me the most extreme levels that an RSI can really. Gorilla, if you said that, I'd be piling into some dollar longs, I think. Gold analysis with Captain. My friend, we've done gold twice. I can't think of anything else to say. Feel free to rewind it a little bit. Shalom. Should we do dollar yen? We can have a look at dollar yen. So I'm still bullish on dollar yen in sort of the short to medium term, obviously capitalizing on dollar strength and the relative yen weakness. So what I'm looking for really is some sort of upside on dollar yen into 160. Now, at 160, this is where the Ministry of Finance is projected to start interventions. So in between 160 and 165 is where I'm looking at. So if you go back and look at previous interventions on the yen, dollar yen is always the benchmark. That's where they look in terms of institutions. But it's never on the level exactly. And if it was, we'd all be millionaires because we could just play sell limits. That'd be amazing. But anyway, so I'm not really thinking it's going to be on 160. It might be slightly before, or it might be slightly after, which is why I'm looking in between 160 and 165. When that happens, and I'm saying when because it's very likely to happen, I just don't see a world where they don't intervene pretty soon. We are likely going to see some downfall. Now, the other thing is, it's not only hard to time, it's also very difficult to predict how much of a move we're going to get, because we've had interventions before where we just had a very small move and then continued the way we were going. Then we had the last intervention back in July where we had this huge move to the downside, and it caused ripples all over the market. So yeah, I'm not going to be looking to sell. It's just something to keep in mind. US 30. Okay. We've just done US 30, but I'll do it very quickly again since we've got some time. So US 30, I'm looking for some sort of pullback here. Now, whether we'll get the pullback, I don't know. If we do, I'll be taking the trade. If we don't, then fine. I'm not in. So likely the situation, if we do get this pullback, it will be from the FOMC. But, you know, I'm being quite generous expecting this much of a move. So again, we'll have to see. There's no certainties, but I would like to go long in general. We can also see that on the Edge Finder, Dow is reading very bullish. So if the Edge Finder's bullish, the trend's bullish, what do? We look to buy. It's that simple. It's not actually that simple, but it can be. Just watch pound dollar, and we have a very similar trade. There's also a volume divergence on the 4-hour. That's good to hear, Nathan. I've never heard of a volume divergence before, but I'll take your word for it. I have Gush oil sell. Should I take profit? Let's have a look at oil. To be honest, I think if you're already in short positions, I think you're pretty good really to look a little bit lower towards 73.2. I'd say that's possibly where you might start finding some support. But yeah, at the minute, it's just a free fall. Oh, sorry, Bashi. I just saw you've been asking about US 30. I was getting a bit mixed up because someone else was asking for US 30 chart. My bad. Kyle, I use all sorts of platforms for different things. Edgefinder is like the trade scanner I use. So if the Edgefinder is bullish on something, that will then pique my interest to go and research on other things, so reports, articles, all those types of things. Gold analysis with Captain. I'm glad to hear that. Thank you very much. From Pakistan. Good stuff. It'd be funny if we see a rate cut. It would not be funny, Zorro, because my positions all get stopped out. What about Pound New Zealand? I'd look more towards going long Pound New Zealand, I think. Let's just see what the chart's doing. Where's Pound New Zealand here? Actually, I've just realized I keep looking away to read the chat. Let me put that over here. There we go. That's a bit more social. Okay, so Pound New Zealand, yes, I would more look to go long. I think there's a little bit more optimism around the sterling at the moment. It's definitely not out of the woods, but I think the fear is kind of already been digested. It's already happened. So now it's more a case of what's happening next rather than, oh God, the UK's in the bin. So yeah, I'd be more looking to go long because China is still really weighing down the New Zealand dollar. So yeah, I think, to be honest, this doesn't look too bad. Look towards going to these previous highs, maybe a little bit lower around here at 2.23. Yeah, I think that looks quite good, actually. It's not the strongest trade idea. I mean, I've not really seen much regarding Pound New Zealand, but just from the face value of it, I think it's a decent start, really. The AI thing, the DeepSeek affected Nasdaq slightly more. Can you tell any best trade for Forex right now? No. If you want my signals, you're going to have to pay for them. I'm happy to sit here and do some analysis with you, but there's no free juice here, unfortunately. Australian dollar Swiss. Yeah, I'd say that's more on the bearish side, especially after the Australian news. Yeah, downside. Okay. It's not a very eventful market, actually. It's very sort of sideways. Yeah, to be honest, I think I'm more towards going short in this market, but I wouldn't actually go short. If I had to choose a direction, downside makes more sense. But yeah, I don't really see much going on, to be honest, with the Swiss or the Australian dollar, other than bearishness. Oh, James, I killed the market today. Can I send you a screenshot? Yeah, of course you can. Please set white background for the chart. No. If I wanted a white background, I'd have a white background. Not to sound rude, but, you know, no thanks. Dollar CAD. Okay. So you guys want Australian dollar against the US dollar, pound Swiss. Okay, fine. So what was the first one? Noir, you want pound dollar? We've already done pound dollar, so let me do some of these new charts. I might go back to pound dollar soon. Well, the chat's moving fast. Hold on, guys. I'm not a fast reader. Slow your horses. Okay, so dollar CAD. Yeah, I think we did dollar CAD as well. Well, the Bank of Canada cut their rates today. by 25 basis points. It was expected, so it wasn't really a huge deal, but something to keep in mind. Let's see. To be honest, I think following the trend is probably the easiest way here. So I'd wait for a slightly lower move, possibly just a 50% retracement of the upside that we saw, and then potentially start looking to go long. The problem is, actually, hold on. I'm going to change my idea just because obviously Australian dollar is pretty weak right now. And we have potential oil strength coming, maybe. That really does depend on what Trump's going to do. So, yeah, I'd be looking for some sort of pullback somewhere. We'll see where that goes. Yeah, maybe a 50% retracement sort of into this level would make sense. Stop loss at the previous high, take profits down here. Yeah, I think that's a bit more satisfactory than going long. What do you think of KO? What is KO? I assume it's commodities, but I'm not sure which one. Or is it a stock? I don't know. This is TradingView, Jimbo. Yeah, white background isn't fun. Actually, it's very hard on the eyes. I've got a white background on my other platform, but yeah. Noir, this isn't my platform, or this isn't my stream particularly. I'm just here as a guest to fill in some time before we have FOMC. But I do stream every day on my own channel, so I do basically the same thing. We'll go over some charts, we'll play some trades, that type of thing. Yeah, Vidan, I know you've got a position on KO, but I need to know what KO is before I can really tell you anything. I'm very limited in terms of knowledge when it goes outside of G10s. Yes, I've got a Telegram gold analysis. It's free, so you can join that one. There's a link somewhere in the chat if you scroll up. Anyway, I feel like I've been a bit rude on this stream, so I do apologize if I've offended anyone. But here it's currently 5:30 p.m. So I should actually be charging you guys some overtime. Of course, I'm joking, don't worry. Can you check Australian dollar, US dollar? I suppose I can do. Yeah, I mean, downside, obviously, I've already spoken about this market, but the Australian dollar is really not in a great place. The US dollar, I am under the impression is going to continue to the upside. Could be completely wrong. We're going to have to see what happens later. But yeah, it wouldn't be a surprise to me if we come back up towards 110. Eventually, it might take some time. We might see a little bit of a spikeage today, and then maybe some upside again. We'll have to see. Can't really say for sure yet. But yeah, overall, I would suggest this market will continue down. In terms of where to, let's have a look on the. Actually, let's go to the weekly. Let's see what levels we've got. I suppose actually this is the only place pointing out. So we've got a really strong support level that we're currently at. We've got a secondary level down here. So yeah, to be honest, I would say I'd be quite confident really to start going short and targeting the 0.565. This is a large move. This is a 600 pip move that we'd be looking for, but anything's possible. We'll see. Oh, KO is Coca-Cola. Okay, sure. I'll have a look. Has FOMC come out yet? No. So yeah, as Bashi said, we've got an hour and 20 minutes roughly. So okay, let's have a look at Coca-Cola. Again, I've got no idea about the financials or the earnings. I have no clue. So all I'm going to do is give you a technical view, and that's it. So let's have a look. Daily. I mean, generally, is just upside, really, isn't it? So already I'd be looking to be a buyer in this market. Let's see pullbacks. Yeah, it looks fine. But yeah, again, unfortunately, I can't really give you much. I'm not a stock guy, but I think, again, just looking at the daily and the weekly trend, I think buys are what make the most sense in my book. There is earnings on the 11th, so still a while really until earnings, but yeah, that's all I've got for you, unfortunately. DXY holding above the 0.5 fib. Is it? I've not even checked the fib, actually. I know it respected the 107 level quite nicely. Yeah, I suppose. Yeah, I suppose it's kind of the area, isn't it? Depends where you draw it from, but yeah, I think the dollar's fine. I'm not concerned, really. My charts are closed, but can we see DXY? I want to see how it's holding the daily. Okay. Yeah, I mean, we had pretty strong momentum this morning, actually, or later this afternoon. Oh, sorry, earlier this afternoon. But it seems to have died down. Now we're approaching FOMC, which, yeah, isn't a surprise massively, really. So yeah, I'm quite happy to hold. Again, I'm already in some positions around the dollar, so dollar Swiss is completely fine. New Zealand dollar almost stopped out, but still alive. Pound dollar is, again, completely fine. My euro pound positions are okay. We've had the move I was expecting, so anyone that's been watching my segments for a while will know I've been stuck in this position for quite some time. So I was just looking for a mean reversion. It seems like we're currently having that. So yeah, currently just waiting for the market to move to the downside, especially with some increased optimism around the pound. I don't think it's out of the question. It kind of found a little support level. Yeah, it did. I think Jay Powell is going to say USA doing well and they're on track. Yeah, Bash, that's kind of what I'm expecting. I don't see any huge concerns regarding data releases that the Fed would be really worried about, to be quite honest with you. I think the data recently has been a little bit lackluster, but definitely not enough to warrant a rate cut. So yeah, we'll see. But again, I think we don't need to overly concern. I mean, we could sit here all day and analyze and think and things, but you can't predict what someone else is going to say, really. At least not word for word. Anyway, let's get back to it. So what is interesting here? Do I have anything? Yeah, oil still moving down. I'm just really conflicted on what to do with oil. I'd love to get in, but yeah, it's a little bit of a. I don't have a good analogy for this actually, but it's one of those ones where it could look quite good to enter down here, and then Trump comes and says something, and it just continues down. So it's like, I don't know, you're playing with fire, I guess. You're playing Russian roulette. Can we see data on the edge finder? What about gold? Okay, we'll go back to gold again shortly. This is the current readings on the edge finder. Unemployment and CPI. Oh, right. Okay, I see. So previous unemployment, where am I looking at? Oh, let's just look at the economic heat map. So you wanted to see, yeah, unemployment is okay. So actual forecasted, okay. So we had a slight uptick on unemployment claims, slight downtick on unemployment rate. GDP increase, that's good. Manufacturing increase, that's good. We had services increase as well, that's good. Retail sales slight decrease, that's not great. CPI's the same. Core CPI slightly tickled down. That's good. So yeah, generally speaking, I'm still very bullish on the dollar. I do I do trade QQQ by, I trade the S&P, it's not QQQ. Oh wait, is QQQ Nasdaq or is that the S&P? I'm not sure, because QQQ is futures talk, isn't it, or options talk? But anyway, yeah, I'm relatively bullish on the indices markets at the moment, but not right now. So it's not a case of I want to buy this market at the current price. I'd more want to see a slightly lower price and then start looking to go long, just because, again, I'm thinking that Powell is going to be more neutral to hawkish, which has a pretty high probability of pushing the indices down. So yeah, I would quite like to wait for a little bit of a lower entry, so possibly another test on this level and then get long. But yeah, we'll see about that one. So yeah, longs in general, but yeah, waiting. Someone else asked for Nasdaq. Exactly the same thing on the Nasdaq. Would quite happily take a long position, just not right now. Obviously, not right before FOMC anyway. But yeah, I think just looking at previous levels is probably the best idea here, and just finding which one is best to enter from. So yeah, we're pretty much chilling. Interesting. So yeah, the dollar's sort of just playing around. We're not seeing much direction here. It's been pretty sideways actually all day, apart from a very minor spike to the upside. It wasn't very eventful though. Okay. How's Mrs.? Yeah, she's good. She's good. She's currently doing TEFL, which is basically a course on how to teach people. So that's in preparation for Korea. Silver, okay. Yeah, I'm definitely still looking for longs on silver. It's just more a case of where we're at. I'm not seeing any immediate levels. However, I would potentially buy around here, sort of 28, if we could come back down there. Even down here, it's a little bit of a stretch, actually, but around sort of 25, 26, oh, well, 26 to 26 and a half would be quite good. So I'd be quite happy to buy these levels. But again, right now, probably not. I just need to wait for some sort of catalyst really to get into silver. Cool. Yeah, I know about that. I used to learn Korean, Japanese, Spanish, and Arabic. Oh, interesting. Didn't know that. Hello, bro. What do you think about GU today based on the FOMC forecast? Eloquium. I would expect a bearish reaction on the dollar crosses, but as I've already said, there's no way to predict it fully. Just based on the current data for the US, it seems fine. I don't see any reason for Powell to come out more dovish, but I'm definitely not as smart as Powell, so we'll have to see. Yeah, market pulse, exactly. Silver, yeah, the price action right now is pretty flat, so nothing to do there. So yeah, I'm pretty neutral on gold. Well, I'd say more neutral to bearish on gold. Silver, more just neutral until we get an entry. Coffee, I'd love to get into a coffee long. UK gilts are still heading to the downside, which is nice. So I need to keep an eye on the gilts. Get rid of euro dollar now. What was here? There we go. It's that one. But yeah, it's just been essentially range bound for the past sort of week. I think neutral power gives strength to the XY. I think it's better than nothing, but yeah, we'll see. Gilts are essentially what the government's paying on their debts, which is why it was such a problem. So, in fact, Bashi, you've got my Twitter. If you go on my Twitter page, I've got 2 video breakdowns, sort of go into more detail on this. So I won't do it here exactly, but essentially the problem is the government, the UK government's in quite a large amount of debt, and the gilts tell us how much interest they're having to pay back on that debt. And the problem is it's at the highest level that it has been since 2008. So it gave a lot of investors a little bit of fear on how is the UK government and the Bank of England going to sort it out? How are they going to pay what they owe? Which is why we need interest rate cuts. And that's why when we had, was it the Bank of England? Somewhat, I can't remember. We had it was inflation. That was it. UK inflation came down, which is a good sign for the pound. It gives a little bit of a safety net because obviously investors are now looking towards a rate cut by the Bank of England. But again, go and watch the video I put out about that because I explain it in more detail. Would love to have time to follow all her trades. Who's her? Dollar CAD's nasty today. Dollar CAD's been nasty for a while. It's just sideways. Bought gold at 25.70. Do you expect all-time highs tonight? I expect the opposite. Actually, I would expect a bearish gold tonight. Again, because I am quite bullish on the dollar. I would assume that the pretty stable data we're getting out of the US wouldn't cause wouldn't cause Powell to be dovish, really. So yeah, I'm actually leaning more towards a bearish gold later today. Oh, Nancy Pelosi. You know what's funny? Nancy Pelosi's returns aren't actually that good. I mean, obviously they're good, but then if you compare her returns to her colleagues or her peers, she's actually not. I think she's in 15th place. I think she's considered one of the best because she bought Nvidia. Was it Nvidia or the Nasdaq or something? She bought it at like the perfect time, which obviously gained a lot of attention by retail. But yeah, her returns are pretty lackluster compared to the other people that she works with. Pound yen. Okay, sure. Not had pound yen yet, I don't think. Pound yen. Yeah, I don't know. The thing is, I'm very cautious about the pound. I would suggest, well, actually, I can't suggest anything. I need to stop saying that. I would say I'm a little bit more or a little bit less bearish on the pound than I was. But it really depends on how the Bank of England moves from here. The yen, I don't think that the bullish movements we've had is going to be sustained for very long. It might continue up in the short term, might just continue to make a slightly lower high around here and then continue down. I really don't know. But yeah, I just don't think the rate hike that we had from the Bank of by the Bank of Japan was enough to change its course. So yeah, I would more be looking to go long, but it's just a case of where would I want to go long. Maybe down at the next level of support, so somewhere here. Maybe we'll see. But yeah, to be honest, I'm more neutral. I just want to see what happens rather than actually being involved in the yen crosses. Tana, I don't think you're the only one in gold sells. I think someone else said they're in shorts as well. She sold Nvidia before DeepSeek was launched. Did she? She's sneaky, But yeah, she's definitely. If I probably should. From my personal opinion, allegedly, it seems like insider trading because it's just her timing is always perfect, or from what I've seen is always perfect. It's crazy. But if you look at these people, their salaries are like 100 to sort of 250K, I think, roughly in that area. But they've got net worths in the tens of millions. And it's like, yeah, there's something going on there. That's not right at all. So when I signed up for, well, when you sign up for any broker, they'll ask you, are you related to anyone in that's got connections to the stock market? Are you in a place of political exposure or something along those lines? And it's like, even if I was, let me trade. Everyone else does. On the 1 minute, there's lots of bearish pressure. I feel a rate hike showing a bit on GJ. Yeah, there might be some slight risk off flows, but I'll be honest, the 1 minute, yeah, you can't really do much. You can't really tell much on the 1 minute. Hey, just joined. Did you want US 30 already? I've done US 30, but it seems to be quite quiet today, so we can have another look. So yeah, I would love to get in a long position. Mainly just looking now for some sort of pullback. Ideally, back down to this previous support level would be beautiful. So obviously we've got structure here. We have a pullback, retest this level, and then continue up. That would be the easiest way to go about this. But again, we do have FOMC tonight, so it could get a little bit messy. We'll have to just take it as it comes. Quiver Quant tracks all the top US politicians. Yeah, it does. I've looked into it, but I don't know. I just don't want to put my money into it. I don't know. I have a bad feeling. Not for any reason. Just yeah. Hey Chandler, hope you're well. Are you talking to the A1 Chandler? But yeah, anyway, okay. So guys, I've got I've got a couple of minutes left. Actually, let's see. Let's just double check. So need to move this over again. So there is me. Oh, actually, yeah, I've got 4 minutes left. Then you've got Nick coming back. Then after Nick, you've got Chris. And then I assume Chris and Nick will probably do the FOMC together. I don't know. But yeah, okay. So if there's any final questions that you want to ask me, I know you're all dying to ask me a question. So now is the time to do it, because I will be gone for the rest of the day. Poor guy never gets attention. Well, maybe that's the way he likes it. Although he does come on. I've seen him on the stream a few times. I know he did the quiz. Australian dollar yen sell is quite interesting. Bashi, I am streaming FOMC, but I'm doing it in my Discord. It's not public. Australian dollar yen sell. I think this actually would probably be the best yen cross to sell, just because the Australian dollar is really not doing too hot. So in this situation, I'd be waiting for a very simple break here. Break of support, retest, continuation. But again, I'm not really a fan of the yen, but I think with two pretty weak currencies, it's probably the best option, really. Or the other way to go about that is wait for a rejection, a lower high, and then again, a continuation to the downside. Full margin FOMC? Yeah, of course. There's no other way to trade FOMC. You've got to go full margin, or it's just no fun. Talk about tariffs this weekend. There's not really much to talk about the tariffs, to be honest. There was actually a statement. Let me pull it up here. Give me a second. So this statement here by the Bank of Canada. I'm not going to read all this, but essentially they're saying that they are very concerned about tariffs. So you can see the Bank of Canada has highlighted the potential risk to the Canadian economy if broad-based and significant tariff were imposed, such tariffs could disrupt trade flows, increase costs for business, and dampen consumer spending, particularly in trade-dependent economies like Canada. So there is that. It's causing a little bit of concern, putting a little bit of pressure on the Canadian dollar, but yeah, there's not much. I think Colombia, was it Colombia? I can't remember exactly where he put tariffs on. I think it was Colombia. But yeah, I think the ones that matter to me mainly are Europe and Canada. So I'm going to have to pay attention to what he decides to do there. Yeah, Bash, you need to stop spamming. It's bad for business. Are you seeing the head and shoulders? No, I don't trade head and shoulders, but yeah, the thing is with technical patterns, from my experience, half the time they work, half the time they don't work. But the main thing really is just obviously the risk reward. So if something happens 50% of the time, that's great, as long as you have like a 1 to 2 risk reward or more. But yeah, it's just not really for me. I assume you mean shoulder, head, shoulder. But you know, I don't really know what direction you would expect from this. So I suppose you could look for a break. You could look for a continuation to the downside, or a rejection off that neckline. But again, it's not something I'm very well versed in. My technical setups play more than 50-50. Yeah, Brandon, I'm not saying every technical setup. I'm saying the pattern. So like, you know, a flag or a head and shoulders, or a, you know, the ones that are the most common tend to just happen 50% of the time. They'll go one way, 50% they'll go the other way. But it's the same as a lot of strategies. A lot of the money made from a model is from the risk model, not the actual strategy itself. Hey, Nick.
What's up, James? I was enjoying your conversation there. It makes a lot of sense, and I completely agree with you. A lot of times it's more about the risk management than you know, the entry concept. I would say I've said this many times, like in my tweet rambles and stuff, but I think that one of the most overrated things in the trading community is, number one, technical analysis, and number two, entries. In general, people focus so much on like the entry, and it's out of like fear. I think it's fear of drawdown, fear of, oh my gosh, what if it doesn't, you know, what if I'm not in green profits right away? And it's like, you know, hey, nothing is easy. Nothing is, you know, nothing about trading is easy. So perfect entries are kind of an illusion almost.
A lot of it is just the way the human brain's wired as well. No one likes to lose. Obviously, we're built really to be completely risk averse. So having a, you know, what most people consider a bad entry goes completely against what the brain is telling them to do.
Yeah. I heard someone who I look up to a lot in the trading space. His name's Rob Booker. He also explains, he's kind of retired now, but when he would talk about this topic, he would always point out that the human brain, especially nowadays, wants like this instant gratification like no other. Like we want like the quick win. We want to be in profit. We want to lock that in. We want to know we won. And nobody wants to kind of like work with things. He actually made the comparison to divorce rates, which I thought was interesting. He was like, high divorce rates because people nowadays don't want to work with things. They want instant gratification. And I think that actually does apply to trading as well. People don't want losing. They don't want to realize losses or go through drawdown or nothing hard. People just want easy. And unfortunately, trading does not reward people who only seek easy, you know, with no work kind of results.
I never thought about it like that, but I think, yeah, that's completely true. Even, you know, TikTok, social media, it just ruins your attention span and feeds that gratification inside you. So yeah, it makes complete sense.
It's like we live in a world where when something goes wrong or is hard, people tell you to quit, right? Like same thing with like with the gym. Like people like, oh, if you're not happy with yourself, this is kind of going off the deep end, but like people just say, just accept it about yourself. And it's like, no, sometimes you need to like discipline yourself and work with something difficult. And that's trading too, right? Trading entries and drawdowns are never going to be perfect. And that's just that. And it's like, if you accept that and you start, you know, saying like, okay, well, what am I going to do about it? How am I going to survive? How am I going to, push on, then you're in the constructive thinking rather than the denial phase.
Yeah, no, I completely agree. Yeah.
Yep. It's big stuff. Well, James, I appreciate you taking over the stream for a while and helping us on this kind of marathon of a day. We're going at this point several hours in, and we've got FOMC around the corner. So I appreciate you helping us with the show today. As always, everybody in the audience, do me a big favor. Make sure to go subscribe. Go check out Forex James on his YouTube channel. His channel is up and coming. He's got a great circle of people who also tune into his live streams as well. And he volunteers to come on to our show and help us as a community to do what we do here on the A1 Trading Show. This is a collaborative team effort live stream that we do round the clock all week long. So again, James, thank you very much for contributing and helping out to that. And have a great rest of your day, man.
Cheers, Nick. Thanks. You too. See you later, guys.
See you, man. 900 people tuned in. Really appreciate you hanging out with us, and hope you enjoyed that segment with Forex James. Again, a regular contributor to the A1 Trading live stream, and make sure, like I said, to go subscribe to his channel if you have not already. That's the biggest thing we can do to thank people who come on our show, is to make sure that they get some recognition on their channel as well. Okay, so I did some stuff today. And look at that, we got some interesting moves lower in indices here this afternoon now, ahead of the Fed meeting. Did we have any? We didn't have any surprise news here, did we? And at 1 o'clock, let me just double check. Nope, nothing. Still kind of counting down the minutes here to the Fed press conference. Now, I do just want to kind of go over a little bit of a game plan. We've got an hour here to kill hanging out. I'm going to give you guys a little bit of an overview of what I did today in the trading account, as well as what I plan to do in the trading account based on what we get from the man, the myth, the legend, Jerome Powell. So I did some stuff. I shorted some puts on some stocks that I like, which is, fun. Let me go through some of that stuff. Let's go ahead and take off our moving averages, and I'm going to show you a couple stocks that I moved around some short puts on. So I shorted puts on Fortinet. I think I did a $90 strike price short put on Fortinet. Some of these stocks are moving with a lot of volatility, so you're actually getting some pretty good premium from shorting puts. I also shorted puts on my favorite stock, which is Tesla. Well, I think my favorite stock of all time might be Google, but Tesla is definitely top 3 for me. I've loved this company for a long time, and I should love it. It has made a substantial impact to my trading account. I've owned Tesla off and on, traded it since March of 2020. It has been one of the most, today's day and age, people know NVIDIA, like new stock traders and investors. Everybody knows NVIDIA. I mean, everybody knows Tesla too, but Tesla was an account changer for me. I went long and traded in and out of Tesla for the last few years, and it has been one of the most game-changing stocks to my portfolio. I trade everything. I trade indices, gold, currencies, stocks. Tesla is one of the top producing symbols in my entire portfolio, the main portfolio. I've made a lot of money on Tesla. Now, there's other things I've lost money on. I'm not, it's hard to mess up Tesla longs if it goes up like this. But you had to be somebody who believed in Tesla. And, I still really like the company. I've liked it for years. So what I did is I actually, they've got earnings later today. I'm buttering this up here because I shorted puts on Tesla. Shorted the 330 puts here. So what I've done is basically volunteered to, do I have a template for this? Average entry. No, I really should do I sold puts on Tesla here. So basically, I'll just do this. Sold 330, no, not 440, 330 puts for the February 28th, 25 X date. And I collected for doing that $650. So I made $650. I guess I shouldn't say I collected $650 in premium for shorting a put. Many of you guys probably know what buying a put means or buying a call means, but you may not be as familiar with selling or shorting options. So I actually sold or shorted the $330 strike price put on Tesla. Think about this. It's like if somebody has, maybe if you're a sports betting person, we were playing around with sports betting yesterday in the office, just like tinkering with it. I know very little about sports betting. I get the basics, but it's kind of like if you have this, if you're the casino, right? There's the player and there's the casino. The casino sells bets. That's what they do. They sell bets and they collect a spread on every trade or bet. No matter what happens, their job as the casino is to balance out the bets on both sides so that they don't take too big of a hit themselves, and they collect spread, or I don't know what you call it is it VIG? I don't know. What's the spread term in sports betting? Like the commission, is it the spread? The little tax they take on the trade. You know what I'm talking about. On your betting, you know how it's always like minus 110 if you do any betting, it's always 110. It's not always minus 100. Anyways, you get my point. It's called VIG. Yeah, okay. Spread, VIG, whatever. You get what I'm talking about. You can do the same thing in the options world. You can actually sell bets to other traders. That's exactly what I do when I am shorting puts or shorting calls. Now, with earnings today, Tesla very well could rocket ship higher or plummet lower. I don't know what's going to be said on the earnings call. And we definitely don't know what Mr. Musk is going to say. That dude is crazy. Love him or hate him. Oh my gosh, he's crazy. So is he going to do some saluting? Who knows? Is it a, I don't know. That's another conversation. Anyways, the point is Tesla could go all over the place. And if it drops big time, what does that mean? Well, that means for my position, I got to cover someone else's bet who bought that put. So actually what happens in that scenario is I get a situation where I actually have to fulfill that options buyer's bet, quote unquote. Basically, I have to buy shares of Tesla at $330, no matter where they are trading at expiration date. So if they're trading at 300, I still have to buy them at $330 per share. And specifically, I have to buy $100 worth at $330 per share. That is 33K of Tesla shares is what I have to buy. Okay? Appreciate that, Kyle. Yeah, so it's the fee the bookmaker or sports book charges for placing their wager. And as we know, most bettors lose money. Most traders lose money. Speculation. There's somebody out there who bought that put. They paid $650 to me, right? I'm the option seller. They paid $650 to me to buy this put. And my obligation is to fulfill that bet if it hits. I pay them out, basically. So why would I do that? Well, I got paid $650. If the chart goes here by expiration date, I still get $650. If it goes here, I get $650. If it goes nowhere, I get $650. If it almost gets there, but not quite, I still get $650. And what if it drops? I still get $650, but then I also got to buy the shares here for a loss. Does that make sense? That's the concept of shorting puts. The opposite would be true if you were to short calls, right? You can actually short calls. And I own shares of Tesla. I own shares of Tesla somewhere in the low 200s. I own shares of Tesla already. So what I could do, and I did recently, is I sold calls up in this area. I recently covered those and took a profit on those shorted calls. That bet did not hit, so I collected the full premium and moved on. Now I'm shorting puts basically saying I'm willing to buy more shares if this thing drops. And what I'm going to do is if Tesla tomorrow is trading up, if we jump up to like 440, something like that, like if we have a crazy up move on Tesla on earnings tomorrow, then I'll look to sell calls again. And this put would look really good. Now, it wouldn't look good for the put buyer. It'd look really good for the put seller. But if this thing drops hard, then I get put into the negative and I have to deal with that trade. How much do you risk on this trade? I have to commit up to $33,000 on this trade to buy the shares. That does not mean I'm necessarily I guess actually in technical terms, I am risking, you ready? This is going to sound crazy. I'm risking $33,000 to make $650. That sounds crazy. But that's because technically I have to buy 33K worth of shares. 33K worth of shares could go to zero. If Tesla, the entire company, went bankrupt, then yes, technically my max risk would be all of the money invested in the company. But I don't think that's likely to happen. And if it does, I probably would look to sell a portion of my position before that happens. So my risk is not actually 33K. I guess on pure technicalities, yes, it is. But again, the likelihood of that happening is so low. Could happen. Anything could happen. But yeah, my risk technically on the trade is, well, what if I get assigned the shares and Tesla just goes sideways for a number of years? I could sit in a drawdown for some time. That's a risk to the trade. That drawdown could be much greater than the $650 I collect in premium. Anyways, that's a trade that I did this morning, or actually just right before stream. And then Fortinet is another one that I did. This is a cybersecurity company that I like. And just going to continue to watch a couple individual names. Nasdaq had a little bit of a flush lower, reversed course so far. Let's take a look. Is that an NVIDIA-led sell-off? It is down 6% here today for NVIDIA. SMH, I have a position on this one. Not been too nice to me so far. SMH still holding support here around $238 per share. So I'm going to continue to watch that. Not Fortnite. That's right. Looks like Fortnite. I guess if you said it in a certain way, Fortnite, if you said it with like a massive country accent, Fortinet, it's kind of close. No, Fortinet is a cybersecurity company, and I like that area of the market quite a bit. It's very, very expensive though. You're paying everybody knows in the future that cybersecurity is going to be huge. That's why cybersecurity companies like CrowdStrike and Palo Alto and Fortinet, why they are so expensive in terms of valuation is because everybody knows cybersecurity is a must for the future. Governments are going to spend on it. Individuals are going to spend on it. Businesses are going to spend on it. It's going to be a huge, huge need in the market. Take a look at Bitcoin up to 102,000. I've been really impressed with Bitcoin's price action. Bitcoin is doing a little bit of the gold factor. Recently, despite the strong dollar, right? Gold has held up and then actually recently started to trend up, which has been really impressive. Bitcoin, I would say, is doing something similar right now, where Nasdaq has been kind of getting hurt, and Bitcoin has sort of done something like this, where it's not doing great, but it's holding up on a relative strength basis. It's holding up pretty well. Are you still doing SPY? I'm still long the S&P 500, yes. My trade is just very, very slightly in the positive at this moment. I've got a stop loss below the January 27th Monday lows. If we break those, which could happen, if we get some scary stuff in the next few hours, right? But part of the reason that I sold some of those puts is because the options market is pricing some really big swings on the Jerome Powell stuff. And certainly it could see some big swings. But I typically actually like to do something insane. I like to short volatility ahead of major news events and major events. It's counterintuitive sometimes. A lot of people like to make big bets right before. I actually like to sell bets through the options market ahead of big events, simply because a lot of times it does move the market, but doesn't move as much as people think it will. For sports bettors, it's kind of like covering the spread. Oftentimes, you know the winning team pretty clearly, but do they actually win by the spread that the sports book has them at? I'm doing a lot of sports gambling comparisons today. Betting, the betting world is large. You can speculate on a lot of stuff in the world. Okay, so let's take a quick look at the Edge Finder, do a little bit of a walkthrough. We got about 10 minutes here before Chris Pulver shows up to the stream. So I wanted to look at some currencies as well as some commodities. I've been doing a lot of indices, so let's just do some stuff here. Let's do this. We're going to remove indices. And we're going to remove neutral readings. The reason I'm doing that is because I already have index positions and stock positions in place. I just want to see if there's something else out there that I haven't looked at yet. So let's go through the watch list here on the Edge Finder's top setups page to see what we're working with. So we have Bitcoin. I already have a position there. USD CAD. Let's go take a quick look at USD CAD to see if there's anything setting up on this currency pair. So if I take a look at the US dollar versus the Canadian dollar, I do really like this chart. Very bullish looking, strong US dollar chart. I already have a bullish US dollar position in play, but let's clean up this chart. I haven't looked at the dollar CAD in a minute, so let's just clean this up a little bit. You've got some resistance at current levels. You've got a really solid upward trend here. The dollar CAD currency pair looks excellent, but it's still sort of in consolidation. And this is a daily chart. So, you've had to be patient. If you've been watching this chart, this has been 42 days of consolidation for the dollar CAD. But sometimes the market will catch you sleeping. If you're not watching dollar CAD, what could happen here is we may get something like this where you do actually finally get the breakout. At which case, I'd be interested in looking for some longs. So specifically, if we can get dollar CAD close like this, right? Strong close above, any kind of pullback into this support level, I would actually like that for an opportunity to potentially ride that breakout. So very interested, but just going to wait to see if we can actually get technicals to align. And what I mean by technicals to align is that we have the reading on the Edge Finder. This looks great. We're getting a +9 for dollar CAD. So this Edge Finder fundamental kind of confirmation looks good. The commitment of traders data also favors the US dollar strongly over the Canadian dollar. So smart money seems to be more bullish on dollar CAD. Retail traders are actually more bearish on USD CAD, which is a contrarian bullish signal. Seasonality favors dollar CAD. The trend to the upside favors dollar CAD. So we have enough here that I like the trade quite a bit. What I'd look for personally, like I said, would be follow through breakouts to the upside, pullbacks into this area, and I'd probably put my stop loss in the middle of that consolidation and look for it to go. If it goes, great. We'll kind of manage the position from there. But if we get to a point where it's like, oh, it breaks and then it's just back and forth, that might be a little less attractive. So that's dollar CAD. I like that setup, but then we can just move on to the next one because that one's not quite ready for an entry. Let's keep going. We know what we're looking for in dollar CAD now, but let's look at platinum. Platinum's not really something that I trade, but we'll still look at it because the Edge Finder is, there are many different people who trade different things. Platinum, just don't love the chart here. Kind of a range-bound market at this time. Not really seeing a beautiful consolidate or break of consolidation at this time. So probably just going to skip on that one, even though it's getting a bullish reading. Dollar ZAR, not really something that I trade usually, but we're just gonna do the full list today. So let's pull up USD ZAR. Nice upward trend, higher lows on the daily chart. Probably would look for at least a retest of this area or a break of these highs. And I know somebody just said, Nick, that's a head and shoulders pattern. But I would only really call that a head and shoulders pattern. Here's the thing with reversal patterns like head and shoulders. Typically, I like to look for some kind of actual break. Like maybe it's a head and shoulders, maybe, but I'd look for it to break this first. Like if that happens, then yeah, I'm with you. That's a technical reversal pattern. But just because this is forming, this is not, in my book, a confirmed lower high. That could just be retesting one last time before doing this, right? So even though I don't really trade dollars R, if I was to be looking at it, it would be from a bullish perspective, either a retest of this level of support and then shooting through and continuing, or breakout, retest, continuation. But again, I would look at this chart as predominantly bullish, and I would not read too far into this head and shoulders pattern. Doesn't mean the price can't go down. It could. But again, I think for this to really be a head and shoulders, you probably need a really confirmed closure. So dollars are, I would lean more towards the bullish side on that one, at least for now. Copper, we can go through. Again, we're going through the watch list today. I'm showing you guys exactly the process. Copper, let's take a look here. Copper looks a lot better than it did. We had this downward trend line, beautiful breakout. Now pulling back. I actually really like this one for maybe a little bit of a new trend forming. And this is actually a really nice break and retest trade that I'm sure someone out there caught. This is a nice little trade or a nice little chart forming on copper. You had the downward structure. We broke through, pulled back. And if China is kind of coming back into the picture, copper would be a major beneficiary. So I like copper for a possible bullish setup. Let's keep going. We're going to look at everything today. Euro, Aussie. Again, not a currency pair that I usually would trade, but we'll pull it up. The Euro Aussie is also getting a bullish reading. So this would be pretty clearly for me looking for this. Break to new highs, retest, continuation, or a pullback into this area of support, continuation. But again, I'm using the system to guide which direction fundamentally I like. I'm not looking to short Euro Aussie. None of the bullish readings I would look for sells in personally. I'm looking for bullish readings that go alongside my system here. US oil, I already have a bullish position, but let's take a look at oil. This is not going well for me, by the way. Here's a USD or US oil trade that I took, pulled back into this area. I may stop out on this trade today. We're testing the 61.8% retracement. If I wasn't in a position, I'd like this entry a lot more. In fact, it looks like a great pullback entry. I could be early to this oil idea. Maybe oil is headed to go through the lows and maybe we're going to go test some deeper levels. But for me right now, I am still in a bullish position on oil. Let's see if this thing can find its bearings and move higher. And if it does not, we stop out. Controlled risk, move on. Oil is killing you, man. It is actually a very small position in the account, and it will be a small loss, and we'll move. Sorry, guys. I think just double checking. Okay, internet should be okay. Weird. That was weird. My internet didn't cut out, but my StreamYard just screwed up. Did you guys lose me for a second? Anyways, yeah. What oil ETF do you trade? USO is what I like to trade. Yes, sir. Exactly. Yeah, so the idea is basically this. Like when I take a loss, I try and keep it as controlled as possible. When I take a win, it's obviously not going to be doubling my account or anything, but I try and just let it become as big as possible and keep losers as minimal as possible. Again, oil breaking 61.8 would be a sign for me to move out of the trade and just reevaluate, which very well could happen. Euro Kiwi, I'm going to skip that one. It's pretty same to Euro Aussie. And now let's get into some of the bearish readings. Let's take a look at pound dollar. Pound dollar on a retest here recently. I'm not sure what's going on with my trading view. So if I take a look at the pound against the US dollar, still like this predominantly on the bearish side. This 1.25 area could be interesting if you get a poke up into that region. So I like pound dollar on the short side. Euro yen. Euro yen, kind of a choppy chart, would look for breaks through these lows or retests of these highs. Both of those, I'd be looking for bearish setups personally. Kiwi dollar. I like this chart, but would probably look for a little bit more squeeze to the upside. I think that this chart has been really oversold, still bearish, but a little oversold. So looking for a pullback up into this area for some short continuation plays. That's how I would look at Kiwi dollar. And again, this is what we're doing right here. This is my daily setup. I use the Edge Finder to filter fundamentally charts. I made the comparison earlier in the day when I was streaming to like a simple moving average. Many traders like to use a simple moving average as a filter for trend so that they can know like, okay, this chart is generally bullish. I'm only going to trade bullish, or this chart is generally bearish. I'm only going to trade bearish. We use the Edge Finder in the same way, guys. The Edge Finder is our fundamental analysis kind of screening tool. I'm only taking trades in the direction of where the economic data, according to the Edge Finder, is leaning bullish and bearish. I want confluences and maximum possibility of things in my favor when I'm trading, right? I don't know what's going to happen. Nothing is certain, but you want as many factors aligned in the same bullish or bearish bias to maximize our potential of taking a great trade. Hopefully that makes sense, but that is the process that I'm doing. You'll see as I'm going through this process, I'm using the top setups algorithm. I'm looking at charts, or I'm looking at symbols, taking a look at the economic data, technical and sentiment data, making a general, outlook on it. Okay, oil's bullish, so I'm going to look for bullish trades. And then I switch over to the technical chart and I say, hey, is that technical chart looking good enough? Is it set up for an entry? And then I'm placing trades accordingly. If you would like to use the same system that I'm using, the Edge Finder is currently on super sale. We've got a massive 35% off discount available right now. During this stream, that is available to everyone who is available with us right now, because 30% off is what we're doing. But during this stream, we're doing 35% off. It's an extra special discount for FOMC Day. Click this link in the chat right now to speak directly to our support team. They can get you set up with a copy of the Edge Finder for a massive discount that we're doing right now. That is our New Year's sale, and it is very soon going to be over. So don't miss your opportunity. Pick up a copy of the Edge Finder. You can use the same tools that I'm using to find the trades that I take every single day. If this has been helpful to you, if the fundamentals are something that you struggle with, the software might be right for you. You can also take a look, for example, what institutional money is doing on a day-to-day basis using tools like our Commitment of Traders report data, our COT data history. You can look at retail sentiment and take a look at what the crowd thinks about certain things. You can also use the put to call ratio to accomplish the same goal of looking at what the market's sentiment on certain things are. These are some powerful tools that allow traders to take their fundamental and sentiment analysis of the market to the next level. Most traders get the technical side. That's what we're finding here at A1. We speak with a lot of traders. We've helped a lot of traders get to the point where they're funded, where they're profitable, where they're moving in the right direction. Most traders, listen carefully, most traders struggle with fundamentals and risk management. That's where people are losing their money. They're not losing money because their technical charts aren't clean enough. Technical charts are relatively straightforward. A lot of the textbook stuff out there can work great, but most people don't know how to actually look at market projections, Fed monetary policy stuff like we're about to discuss with Chris Pulver, economic data. Most people are missing that in their analysis. If you'd like to start using the tools that I use to make that part of the process simple, click the link being dropped in the chat, speak directly to our support team, and they will hook you up with a massive discount on the software for a very limited time. We're going to take a quick break, and then we'll be right back with Chris Pulver just after this.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
All right, we're back with him himself, Chris Pulver. What's up, man? How you doing?
What's up? Happy FOMC day. Market's got a little hairy there from around 12:35 to now, but bouncing back up. I spotted the 600 level this morning. I said between 610 600, watch for those levels to get tested. I didn't think they'd come pre-FOMC, but perhaps they did. So you never know. This is a sign of early liquidity hunts. Maybe that 600 level on SPY, if it breaks, we've got room down to 595. Actually, would work out kind of perfect for some of the trades that I have in for my centering positions. We're still negative on the week, right? We opened up with that crazy low on Monday. We fought back, but we're still lower than Friday's close. So technically the market's still in red. But everything's showing red today. I mean, Qs are down 0.4, S&P down 0.4, Dow's down just a little bit, Russell down. IWM's actually flat today, but the Russell, look at that Russell growth. That's down 0.9%. Okay.
Wow.
Yeah.
Taking a little bit.
What are you looking at today, Nick?
Well, Chris, I want to show you. I got 2 questions for you.
Okay.
Number one, I guess you don't have it because you have the light version of TradingView. But maybe I'll ask this to the audience. I felt like an absolute degenerate because I noticed on Monday or Tuesday, whenever they made this change, I said to Chandler, who edits the videos, I said, Chandler, did they change the background color of TradingView? And they changed it so minusculely for the dark version of TradingView. But I just want to ask the audience, did anybody else notice that? Did anybody else feel like an absolute degenerate who stares at this stuff all the time to notice the slightest change in tone on the coloring of TradingView? That's how I know I'm looking at this stuff way too much. That was my first point. But my second point, Chris, is the other day we talked about SMH together. You might have, so far, your play might be looking a little bit better. You shorted some puts on SMH.
I did.
I kind of took a similar trade. I've got 2 short puts working on it. The spread, the volatility on some of those things, Chris, crazy. I got $7 in premium for selling the 115 strike price 1 month out, and I did that. Yeah, it was crazy. Isn't that wild?
The 115 for 1 month out.
Yep, $7.
That is ridiculous. I mean, dude, I did a 111, which is a trap, but I got $1.13. I mean, let me look at it right now. That's insane. This is SMH.
It just went crazy. It spiked. I mean, let me double check that I'm saying the truth, but I'm pretty sure I said that correctly.
SMH 30 days out, 150. I mean, I don't even have a strike down that. What's your expiration? I've got a 175 strike that's 30 days out, but what expiration did you choose?
I chose February 28th. So hold on.
I don't see that strike.
February 28th right here. So I've got NVIDIA 115 sell put 28th of February.
Oh, you said SMH, bro. That's why I was like, what? Okay.
Oh, no. Okay. Yeah, no. Sorry. NVIDIA. NVDA.
Gotcha. Okay,
Still
very
felt
different.
pretty good about this. $7
yeah,
a premium. 115. That's out of the money. I'm happy to own a little bit more NVIDIA. I own some shares. I own 100 shares about break even right now. Gave back a lot of gains here recently, but it wasn't a full size position for me. So, but I've been selling some puts. I've been selling some puts and stuff today. I sold some Tesla puts. I sold some Fortinet puts. I've sold Palo Alto puts the other day, which are looking good. So I've been selling a lot of cash secured stuff with this week. I think, maybe that's the wrong call. We'll see in about, an hour if volatility absolutely goes parabolic like it did last time we did one of these
Sure.
together,
Sure.
maybe that will look silly. But I think that there's probably just so much fear in this market, so much implied volatility out there to sell on, and I've been doing that.
Yeah, I'm taking a look at the indexes. I mean, look, the Fed isn't going to say anything really that the market doesn't already know, right? The market's anticipating 1 to 2 cuts, unless Jerome Powell comes in and puts the turd in the punch bowl and says we're not cutting rates at all this year. Then the market may not like it. But look, I don't think the market really cares about the Fed today. I think PCE on Friday will matter, and I think earnings that start off with Mag 7 today and tomorrow will matter, and Mag 7 that continues tomorrow. Now,
Yep.
Mag 7 isn't necessarily what's going to carry us for the rest of the year like it did last year, but I do think that it's important to see that, look, financials came out swinging with good profits and pretty optimistic 2025 outlooks. If Mag 7 is showing that the earnings are still justified, that keeps the resiliency and kind of the safety net kind of baked into the markets.
Yep.
And then we have to see if consensus for everything else is going to be okay. Right,
Well,
like
you,
earnings
well, you
season
gotta
is probably
have
front and center for
you
these
gotta
next few
have the
weeks.
Mag 7 earnings
Yeah.
still hold up. You got to have that story
Absolutely.
hold up for
Yeah.
the rest of it, because it's such a big part of the index, right?
Not just a big part of the index. It's like the largest historically ever part of
Yeah.
the index. So yeah, it's pretty clutch that if Mag 7 doesn't come in with you don't have to see like record breaking earnings, but you're going to want to see that these valuations are justified, and Mag 7's got to impress the market a little bit. So which, remember, this isn't Q1, this is Q4 earnings that are printing this week and next week. Q4 is probably pretty good, because after the election everything got a bump. Mag 7 was flooded in Q4 when we saw that big pump after the election, and even through December. What got us to all-time highs through December? Mag 7.
Yep.
Right. So I would imagine that Mag 7's probably looking pretty good, which would again build in some resiliency to the markets. I just, I'm a little cautious of blowing through all-time highs. A lot of things can happen, but I don't think we're going to blow through all-time highs. Yeah, man. I mean, it just expect volatility. My gosh. I mean, I'm prepared for a lot of the trades are going to be something like this. I will sell puts with a trap. Right. So I do like a bear put trap, and then I do either a ratio spread or cash secured put down here on an index or underlying that I'm willing to own. Obviously, index owning, I just want to do SPY Qs. I'm not gonna own any more Russell than I already do. I might trade a couple of the ETFs with dollar cost averaging, but basically between SPY and Qs, and then of course just trading SPX and NDX. I put a lot of those trades on where it's just income. If I can make 50 cents per trade per contract, or $1 plus per trade per contract with a profit trap that's like 4 to 1 or 5 to 1, those trades can work out really well in this market. If it goes up, that's income. If it goes down, that's income. If it goes down a lot, I got a profit trap in the sweet spot. If it goes down a ton, I'm a little in trouble. But I like the markets would have to drop like 10 to 15% for my trades to not have some profit opportunities. So I'm just playing it safe, dude. And I'm active enough that there's a lot of trades in there. A lot of trades in, but I think I'm just going to keep doing that until I feel that we have a bull market to jump back into, or we have a bear market to stay the heck out of the way, or be patient to get in some dollar cost average positions. But I don't know, dude. I mean, I'm not super optimistic that we're just going to blow through all-time highs and keep going higher, although we can. But what are your thoughts on if we go to all-time highs? How bubbly are we getting if we hit to all-time highs and we rip another like 10 to 15% higher in the next like 3 months? I mean, think it's a bubble if we get that high.
Yeah, I think if you had, so let's say 2023 was sort of a reset year from 2022. I think that the Nasdaq, if you took like 2022 down to 2023, then back up through 2023, I think like you took that period and you basically said the Nasdaq was like flat. I remember doing a lot of stuff and being like, wow, all that gain in 2023 really just kind of recaptured our losses in 2022.
Exactly.
Then 2024 was a boom year, right? The Nasdaq went crazy. So I think that it would be reasonable to say, okay, we could probably still have a good year this year, but to have another blowout year, then I would say now you're looking really toppy, you're looking bubbly, because then what's probably going to happen in that scenario is, and this is, I still hold out on like the bullish cases. I think that maybe the bullish case this year doesn't necessarily end, but I do think it probably morphs. I think there's a very small probability that you just get what we started out saying earlier, a Mag 7 run again. I don't think that's very likely. I still think those stocks can do well, but I think that if the bull market is going to continue, I think it's going to because it's resilient and changes into small caps taking a
Got to
turn.
be broader. It's
Got to be
my
something
opinion.
beyond just the same small number of stocks just doing all the work,
Yep.
and everything else up 10%. I think you probably want to see the opposite. You probably want to see Mag 7 up 10 and everything else up 20. Then you'd be like, hey, this looks great.
Right.
But again, I would definitely get worried about if the breadth story doesn't change in 2025. That would be I think that will eventually take some actual root and be a real bearish catalyst. It's been for a while. People have said, oh, no market breadth, no market breadth. If it keeps happening, eventually it will really truly become a problem, because you can't have another year. I mean, I guess you could technically do it whatever you want, but I think it would be very unlikely that you just get another Mag 7 rip this year and everything else just sort of is flat. I mean, let's take a look at everybody at the Dow Jones for a second. This is impressive and actually kind of awesome. The Dow Jones recouped its losses very well, and we've got a solid technical trend. I mean, don't forget about the Dow. Chris and I I remember last year, this conversation we had about over a very long stretch. The Dow and Nasdaq, there's not like one clear absolute dominant index. Now, in the last 10 years, Nasdaq, absolutely. But there's many periods of time in US history where there are value stocks that, like the Dow comprised of, they can actually do quite well. And actually value stocks, the biggest way to think about value versus growth is value stocks have proven their worth. Growth stocks have yet to prove, but have the potential to. So when you take that and you say, there are times for both. There are times for value companies like the Dow Jones, which looks really strong right now. I actually love the Dow for a possible breakout and retest trade. I've been talking about this on the channel. That looks great. If you can get new, fresh all-time highs in the Dow Jones, and maybe we start to see the run finally take place in the Russell that we've been looking for a long time, don't count those trades out, because when they show up, they'll show up fast.
I agree. I would say, so if Dow hits all-time highs, are you buying that? Do you like that all-time high?
I'm not buying the all-time high, but I would just like to see that all-time high happen. I'd be looking to buy dips on it.
Okay. We still have a pretty solid bargain on the daily time frame on the 200 moving average. So I think that a little chop would be, again, this is me asking for the market to do this, but I'd like to see if we have a bit of a fake out to the upside and we come back down to fill in some of those gaps, like that January 13th low, and then CPI gap, and then following days gaps, and we had like 3, 4, 5 gaps in a row out of like 9 or 10 days trading. I'm looking to see, do we pull back into like the 423 level, 420 level. And I don't want that to be like, oh, the Dow's got to, crash a bunch, but I just like to see it pull back, because if we just go sideways from the highs and sideways back down to equal lows around 20, I'm going to start scooping up some DIA. I like that index play. I like that ETF play, and probably similar to what I do in SPY and QQQ. It's like start out with some option trades, maybe be willing to own the underlying, have a little bit of exposure. Anytime I'm talking ownership of SPY, QQQ, DIA, IWM, I'm only putting in like 100 shares for any given account, just because I want to be nimble. I want to trade a lot of options on any core positions. But that, if I own anything, it's like I have one account that's owning the SPY right now, and actually I might look at a roll right now. We're trading at 600. This was, I think I put a 593. I'm gonna take a quick look at this, Nick. So I've got SPY. Yeah, go ahead.
Yeah, go for it. And again, I think that when it comes to these indices, again, many people, we've harped this 100,000 times on the stream, but there's a bit of what is called recency bias in markets, where people look at and they say, look, the Mag 7, they always win. And they do not always win, but they can be perceived to always win. Same thing could be said. A lot of people may be a little bit blindsided by gold's performance last year. Look at the moving averages. I'm just playing with moving averages just because Chris's chart looked cool, so I got mine out. Moving averages, right, look beautiful for gold last year. But there are also times where you're just going to have to sit through the mud with something like gold. There are periods of times where you get bear markets for gold. And look at this. I mean, you want to talk about an ugly moving average chart? There's one right there. No clear direction here. I think that however, trend following is really simple. You're basically saying, I'm following the trend. I don't know where it ends. I don't know where it stops. Look at gold. Gold's got a beautiful upward trend overall. Bitcoin, a pretty good chart. It's a more erratic looking trend, but it's there. Nasdaq still looks good. I mean, if we just keep our moving averages aligned, we say, look, things look good. Hey, even the Hang Seng index is starting to show some signs of upward trend. I like China for 2025. I know, Chris, you do as well.
Yep.
You know, it's been a theme that we've talked a little bit about for some time. I know you've been playing some options on some large Chinese equities. But then you have other stories that are a little bit less clear. Oil is not the cleanest chart here at this time. Copper is not the cleanest chart. Silver just doesn't look as clean for me as gold. But if you do get a good continuation in gold, silver might actually really catch up. So, and then you got the dollar. Here's one that we got to worry about. Here's one that we got to think about. Dollar index still trending higher. And if you take a look at the 10-year yield, this is starting to show some signs of a more formulaic trend as well. So those would be things to watch out for. Really strong currency and rising yields could pose an issue to us, especially in 10, 15 minutes when we start hearing from the Fed. If there's major inflation concerns that are kind of resurfacing, that could pose risk. Could be a back half of 2025 theme, or it could even be a first half if Trump campaign stuff does create some buzz and some concern about inflation. And I'm sure they're going to ask him about that. I'm sure they're going to ask him a bunch of questions. I said earlier, they're probably going to ask Jerome Powell here today when he's at his press conference. They could probably ask him, hey, what are your thoughts on Trump demanding you to do interest rates this way? And he's going to say, I don't listen to I don't work for the president. I work for the people. I work for Congress, etc. So I think you're going to get a little bit of politics here today in the press conference. But ultimately, I think the Fed's going to keep doing what it's been doing, which is let's watch the inflation data, let's watch the labor data, and let's change rates accordingly. I don't think they're going to cut rates a whole bunch this year. What do you think, Chris?
They'd be stupid if they did. Because look, if they do cut rates, I don't think Jerome Powell wants to cut rates. I don't think the Fed wants to cut rates. I think they are towing the line with really making a policy mistake, which at some point, it's going to happen. But this has been the first time that they haven't really been super reactionary versus they've been proactively dovish or proactively hawkish. And that's really odd because it's kept the market on its toes for all these last 3-4 years. But the biggest policy mistake in 2025 would be if inflation starts to go higher and things are way worse and the US 10-year is at 5+% and something breaks in the market or something cracks in the market, the Fed is going to look like absolute garbage. And if they have to hike rates in 2025, the market's going to absolutely hate it. That's probably what I would say would be the combination of all the chips falling into a crash. I think we would come close to a 15 to 25% correction, fast and furious, with some type of policy backstep. So if they raise rates because inflation's nasty, it completely shows that they did it all wrong in 2024. And I don't know. I just think the Fed loses a lot of credibility that way. So I think they need to, mute the Twitter handle and mute the microphone and just Trump's going to say what he's going to say. But if the Fed wants to truly maintain this soft landing, maintain this no landing, maintain something of just stability, they can't raise rates. And in cutting rates, they really shouldn't, because why would you see, I understand that one data point doesn't make a trend, but 3 or 4 months in a row is not good. Right. And so, and the Fed can't admit that they're truly operating accepting a 3% core PCE. They can't accept that. Right. They can't explicitly say that. But the reality is they are. Why would we get down to 2.4 CPI and then they start cutting rates by 100 basis points when all of a sudden we're back up to 2.8, 2.93% again? So, realistically, they've accepted that anything under 3% is good enough, but we're just going to try to keep it there. And now we're on the verge of letting it, resurface and bubble back over, and it could be a problem. So it's not a problem yet, but the 10-year yield is the one thing you should watch, because it can't be good for equities if the 10-year yield goes to new highs. Again, if it goes up to 5% or higher, can't be good.
Yeah, no, excellent points, Chris. And just for the audience's sake, for those who are interested, Chris, you made some really great points. I just wanted to follow up with some of them.
Yep.
So let's just do a quick pulse check on what the Fed looks at. People always drool over what Powell's going to say next and all this, but really one of the kind of purposes of having data is so that we can try and take a look at the same stuff that the Fed is trying to make decisions based off. So let's just do a quick recap. Chris, you mentioned we have PCE still at 2.8. 2.8 is, and this is core PC. This is not CPI, but core PC, which the Fed kind of refers to as its preferred measurement of inflation.
Yep.
2% is way down here. We've not even gotten really, I mean, we've gotten
close.
But that last muscle is the hard part. Up here is the fat, right? Then you get down to the muscle. That's the hard inflation to get rid of. That, you know, oftentimes many people kind of the more pessimistic side says you have to get some economic crush in order to lose that last bit of muscle. So, you know, anyways, that's PCE. You take a look at CPI. CPI is on the rise here recently, 2.6, then 2.7, then 2.9. And believe it or not, the market actually cheered that 2.9 because it wasn't like 3.1 or 3%.
I thought that was such a stupid reaction, honestly.
Yeah. So you've got this weird rise in inflation going on. And the question is, does this bother the Fed? And is it also, okay, well, it's at 2.9, but we have great growth to go with it? Or is at some point the Fed going to switch to, we have 2.9, but we're also seeing the other parts start to weaken?
Right.
That would be the ugly story. That would be more stagflation type stuff. So, you know, you've also got PPI, which did get a lower than expected read, but it's still rising, you know, up to 3.3%. So we've got inflation on the rise. And at some point, the question is that going to become a problem for the Fed? And maybe we get some answers on that today. You know, at the same time, you do have some strong stuff. I've recently, Chris, we've added this new thing. I'm not sure if you've seen this already or not. The U.S. economic heat map is a great cheat sheet. We've had requests for this for a long time, but it is basically all of our key metrics at the same time on the screen. That's awesome. You know, actual versus forecast, GDP growth has been high, PMIs have been high, both services and manufacturing. Retail was a little weak. So we look at this stuff. We're trying to, again, recreate the type of stuff that Fed members would be looking at to make their decision. That's ultimately, as traders, how we could potentially find an edge if you're someone who fixates on monetary policy, would be look at the indicators that they're looking at. So, yeah, I mean, overall, you've got a strong case for a lot of growth, and maybe that's why the 10-year is up, but you also have risks that are, you know, all over the place. If inflation rises on any geopolitical failures, yeah, I mean, it could get ugly real quick because it's already rising. You know, if you get anything that breaks it and accelerates that, we could be looking at some issues. I mean, S&P 500 here, slightly red today, Chris. We got down, same for the Nasdaq. Dow Jones holding up. Russell's eking out a very slight positive move to the upside. Gold's giving back some gains here today. What else are you watching? I mean, going into a Fed meeting, is there kind of what's your main focus, I guess, in charts that you're watching?
Well, I mean, December 18th was a bit of an outlier Fed day because we had 2 o'clock and 2:30 pretty much go the same direction. It was a massive like slam lower all day for that 2 to 4 window. Usually the FOMC is just noisy. So when I looked at the levels this morning, I was looking at 600 to 610. Price is probably going to find one or both levels. We also have Mag 7 starting up today after earnings. So even if the Fed says things the market doesn't like, it could still be resilient with Tesla, Meta, Microsoft after hours. You know, I think earnings right now in the next 1 or 2 weeks will probably show where investor sentiment and optimism or pessimism is sitting, because it, like Netflix, for example, Netflix blew through expectations. And it was just like, okay, it was a positive print, but the anticipated move was around 10%. It ended up going 15%. So same thing, like, I mean, I priced out my trades with just simple mechanics, what the expected move is for the last 10 earnings prints, and then put in some out of the money spreads where if I'm right, I get basically like $1.50 or $2 profit on a 50-cent risk, and I can trade both sides. So
are you playing Tesla?
I'm playing Tesla and Microsoft and Meta, and then I have a pending order on IBM. I have some exposure on PGR. PGR is progressive that came out this morning, and as I thought it'd be positive, even though they had a negative revenue, which I don't know how anybody in insurance right now has negative revenue when you've been charging 50+% on auto insurance and homeowners insurance, and maybe they're just paying Flo a bunch of money. But I'm surprised they had any miss at all. But look at the price action today. Just opens up and shoots higher. My trade on Progressive right now, I've got a 230 by 225 ratio spread. I can take a look and see. I've got CB as well. So let me go to PGR right here. PGR, where are you? It's up around $720 right now. Just need a little bit more time in the trade. No big deal. But let me take a look at the option chain for the 230 handle. So 230 out to the 21st. Yep. So right now I have about a 88% chance of profit, about a 8% chance of assignment. Trade's looking good to hold a little bit longer. I could take some of the profit off the table. I pulled, I'm trying to think what my credit was on PGR. Let me look it up in my tracker. PGR, I think I took like $2 out of this one.
Chris, I didn't
265.
realize too that so today you have, for some reason I thought Microsoft and Meta were, I don't usually trade earnings, but Microsoft, Meta, well, I thought they were tomorrow, but they're actually today. So we've
Today
got
after
a
market,
grand
yeah.
slam today. So
Yep.
we're going, for everybody in the audience, you may or may not be a stock person, but it honestly doesn't matter. That's 3 powerhouse, Mag 7 names. That does impact everything, not just stocks, not just tech stocks, but really the whole market is going to be reacting to the Fed decision here in the next, hour. But then after the bell, guys, and I make this point because there's a lot of Forex guys, there's a lot of gold traders, a lot of futures people that may not realize this. Those earnings will be market moving after the bell. That's 4 p.m. That's in 2 hours, 2 to 3 hours from now. Those are going to be market moving for everything because, again, those are such key employers and drivers for the world that we live in. So huge day today. My goodness, it's going to be a couple volatile hours today.
It will be. And also we have Apple tomorrow. So you've got companies 1 and 2 in the world, Microsoft and Apple. And you throw in NVIDIA, which had a little bit of the shock on DeepSeek on Sunday, which that's not really what happened. It was mostly Japanese yen related. But you got Alibaba making headlines today. It's an AI stock. It's like, okay, if it is, it is. I've been long for a reason, and you want to give it some AI credit and put the stamp of approval of Baba's an AI stock, then let it rip to $120. I'd be happy with that.
Yeah, why not? That's great.
But China still has to prove that it's going to still continue to lift animal spirits and kind of backstop their property market and capital
Chris,
market.
I don't know. Well, we just had the earnings or the rate decision here.
Yep.
I'm gonna go ahead and just safely assume that it remains unchanged, but I will just pull that up here. Take a look at the S&P 500. Switch to our all markets view just so we could see what's going on here. Let's see.
Initial reaction is I'm seeing an initial reaction down on the markets. Yep. So S&P's down, Nas is down. That's a 30-minute chart. Okay, so we're retesting those lows from like the 12:30 time slot.
Yep.
Okay.
Yep. A little bit of initial down move, and just a heads up to everybody.
I'm gonna call this level, Nick. I think 590 is gonna make some. Wow, that's pretty nuts.
590 on the SPY.
590 on the SPY could be tested by Friday. I'm just seeing massive order flows coming in like out of nowhere.
Wow.
I don't know why, but holy crap, that's pretty monstrous.
590 on the SPY, guys. That would be
10 points lower. That's a big drop if we get it. We got to break this low at 600, but I'm saying I've got some real-time order flows coming in right around that 590, so that could get pretty gnarly. If we break that 600, there's not really much to stop it, but keep an eye on it. 595 could still be a market maker defense level. 590 that just shot out of nowhere. So I will be tracking that pretty closely here in the next 24 hours.
Yep, and everybody who's listening, we've got you covered for the next 30 minutes to an hour. We'll be reacting and pulling up everything that we can to keep you informed. We got 1,900 people. If you guys could do us a big favor, just take a quick break to hit the thumbs up button on the stream. Just help us out with the YouTube algorithm. We really appreciate it. So we have about 30 minutes to go, guys, before we get the press conference. So just a heads up for if this is your first FOMC, then Merry Christmas. Good morning to you. It's a crazy time. And if you're new to it, the press conference comes 30 minutes after this, after the statement and after the rate decision. So I'm going to go ahead and assume that we did not get a rate cut, but we will hear some forward projection stuff from Jerome Powell. Yep, 4.5 did not change on the interest rate. We will hear from Jerome Powell in 30 minutes, which could, as we've said, this is Chris and I's like 15th in a row together doing FOMC. Likely what will happen is you'll get some crazy moves here, but the real kind of follow through move, if there's gonna be one, would happen with Jerome Powell. Last time he spoke, markets really tumbled. He came out pretty hawkish. Let's see if that energy kind of matches, and especially with some of the recent Trump comments towards Jerome Powell, there could be some serious volatility to come. So we'll see. So far, just a pulse check on everything. You've got stocks down just modestly on that. Nasdaq kind of remaining unchanged, but Russell and Dow specifically, some of the more rate sensitive stuff here, taking a big hit. You got gold down a little bit, gold, dollars up just slightly, Bitcoin down a little bit here, and oil just off of its lows. So far, not too much motion, but I'm sure there is plenty to come.
Yeah, Sarah made a good point in the chat. The Trueflation, I use that for like a third-party inflation reading.
Yep.
The trend since we topped out around December 14th, we kind of revisited those like April, March and April levels. We have actually like dropped about 0.4. So from 3.11 back down to 2.61. I would say for this is more of like an active reading. So rather than waiting for just the CPI, PPI, PCE, watching Trueflation go down from 3.1 down to 2.61 in the last, let's say, 30 days, that's a pretty good sign that inflation is at least cooperating. Now, I did pull up the Fed statement. I just want to read this really quickly. Recent indicators suggest that economic activities continue to expand at a solid pace. Unemployment rate has stabilized at a low level in recent months. Labor market conditions remain solid. Inflation remains somewhat elevated. So I like that this is the kind of real-time gauge of inflation. It is showing a lower push. This could all change very quickly on PCE. But what is the Fed saying? They're basically at consensus. They just kept the rates the same at 4.25, 4.5. Achieve maximum employment and inflation at a rate of 2%. I can't believe they keep saying that crap because we're not even close to 2%. Judges that the risk to achieving employment inflation goals are roughly in balance. Outlook is uncertain. Committee is attentive to the risk on both sides of the dual mandate. I'm not sure if they really changed any of the language here. Anything else that sticks out? Assess the incoming data, evolving outlook, balance of risks. Continue to reduce its holding of treasury securities, agency debt, agency-backed mortgage securities. That is a bit of a tightening thing. Like there's less liquidity in the market. That could also come back to bite if we don't have real growth and more optimism coming into the markets this year. The Fed has been scaling back and tightening for the last 2 years.
Mm-hmm.
So they've been cutting rates but scaling back and peeling off some of their holdings, reducing the balance sheet. We're still operating a deficit, obviously. Strongly committed to supporting maximum employment, returning inflation 2% objective. Nick, realistically, dude, how far away from 2%? I would say if we're lucky, maybe a year or two to even sniff 2% again.
Yeah, well, you look at CPI, we've had this, this is the thing, is a lot of people, myself included, I was like, hey, this is great. We've made this really landslide progress from the highs in 2022. Mm-hmm. Market got a lot more happy in 2023 about it. Then we kind of got used to this new normal, which is just inflation going sideways. And inflation is it's like a flame. You gotta extinguish the flame, otherwise that flame can start growing back. And that's the thing, is 2%. It may not seem that far away, but if you were to do a percentage base, somebody do the math for us really quick. 0.9 is so it's 0.9 above the 2% target, right? What is that? That is a quick math. It's like a 40% higher than what we're targeting.
45% higher. Exactly.
Yeah. Yep. So you look at that and you say, okay, wow, that is meaningfully higher. It doesn't sound like a lot when you just say 0.9, but in terms of where it's supposed to be or where the target is, there's work to be done. So, something to think about is this inflation is a little misleading. It seems close, but it is not quite close enough. And if the Fed gets serious about that at some point, that could just mean higher for a lot longer.
Right.
And the no landing kind of concept is good in theory, as long as you have economic data continuing to roar. But if that comes, you could very quickly go from no landing to stagflation.
Right.
That is not a far jump. If you get the economy shrinking and inflation not shrinking, then you have stagflation.
Yeah. I don't know. I'm really tempted to take some trade towards that 290 or that 590 level in the SPY, but I keep seeing some levels jumping around between the 590, 595. I think I'd have to say price intraday break below 600, and just today's not the day to take that gamble. FOMC with Jerome Powell speaking in about 23 minutes. I don't know what he's going to say that's really going to be bad for the market. but I don't know who's going to say that's going to be great for the market either. So it's like I expect FOMC today to probably be more choppy, which we traditionally see during FOMC as opposed to what we saw December 18th. So I'll just hang out. I'm looking at either one, a bear put spread where I buy like a 600 put and just trade. For a 598 or 597, I can get $2 or $3 profit, but I have to pay a fraction of that. So for a $3 winner, I only pay $1. My reward to risk is favorable. I could also just go out of the money and buy like a 591 or 590. If I buy a 591 put, it only costs me $1. If price hits my 590 strike, I get at least $1 of credit for that. But if I do it today, if the market drops today, then I'll turn that $1 into probably $5 or $6 of profit. But it's all risk, and I just don't know if we're going to get that big break below 600. So I don't know. I guess I'm not convinced. We have earnings after market today too, so I'll probably just hang out a little bit. I can always place the spread trade tomorrow. If we're like breaking the lows, I can put in a spread trade. But I was kind of getting a little antsy to maybe throw in a long put, but probably won't.
Yep. You got all sorts of stuff happening too on the bond front as well. In reaction to this, guys, we've got the 2-year yield up, the 10-year yield up a little bit here on the day, up 0.9%. TLT tumbling just a little bit, has had a little bit of a resurgence here, but still struggling with this kind of, let's get our moving averages out for a second, still struggling with this overall downtrend we've seen for the last, few years. TLT has been a troubled asset. And I had some sell puts that got assigned. I've been sitting in TLT. I'm still in the red on those positions, but we'll see. It would take something pretty surprising for the Fed to get dovish, but I kind of hold this as a bit of a hedge in the portfolio to some of my risk on stuff. If you get truly, people forget that TLT can do very, very well in a recessionary environment. It's just that we have not had one in so long. But I was making this point at one point, Chris, is TLT, last time it did really well was Trump's tariff war stuff with China the last time around, or the trade war stuff with China. 2018, take a look at TLT from the lows here to the highs. TLT had a 65% return, which is pretty incredible. So
what year was that?
2018.
I was going to say, we've had basically a 4-year drawdown, so it's not any time recently.
No, it's been a while.
Okay.
TLT has been kind of a completely slept on thing, and for good reason. Inflation ran hot, and then the Fed has not been too interested in cutting rates quickly. So, we'll see where that goes. What do you think on metals, Chris? You got any opinions on gold, silver, copper, all that?
I'm going to comment really quickly. I did end up taking a buy on the 591 put. I bought a SPY 591 put. It's out of the money. It only cost me $1.25. I just keep watching that 590 level just spike up. So if we see a break of 600 today on the SPY and we're starting to flush down to like that 595 level, I'm looking to capture some very quick profit on that trade. So $1.25. Realistically, if we're dropping, it'd be a $10 move right now. So it'd be $10 at a 20 delta. I turn $1.25 into $3.25. I'm just going to go ahead and set a take profit on this thing for $3. So go SPY. Let me find it here. SPY for 591, and look to close it out at a $3 credit. Okay, so I'm in for $1.25, looking at a profit close at $3. That'd be a nice return. We'll see if it breaks the lows. It breaks the lows. Powell's coming out in. I can't believe it's still 20 minutes away, but it is what it is. But that 590 is lighting up. And I might just be watching this thing for a quick profit. If I get maybe $1.25, turn it into $2, I might just take it or protect it or move a stop loss and just try to get lucky on this thing. So I'll be paying attention to that, at least for now. You mentioned gold and silver, oil. I did take basically an iron condor today on oil futures.
Oh, did you?
Yep. So oil, not Colgate. I want to go oil. Yep. So oil prices, we're trading at 72.68. I did a 81.50 by 82.50 bear call spread and a 65 by 64 bull put spread. So I collected 20 cents, and that's about $200 per contract in oil. I'm just looking to see if oil stays right here, somewhere around this. It's going to be volatile, but somewhere around this 200 moving average. If it goes lower, it's to find risk, but hopefully we just stay kind of resilient right around this like $70 handle. I don't know what other pressing news we'd have on oil that would like drive it significantly lower or higher. So, if we have a ceasefire, that's been driving prices lower. Obviously, Trump is trying to strong arm Saudi Arabia and OPEC and say like, you guys should just lower oil prices. I mean, the U.S. is trying to pump like crazy. We're trying to do a lot domestically. All these things. I don't know if they're approved yet, but it could be a wait and see. So, but the big question, if we want this like big AI boom, is we have to have more efficient energy on the grid. We've got to have a bigger offer from energy. Coal isn't going to do it. I think you have to have like you have to like unleash U.S. energy potential in order for either prices to go lower and or us to hold this infrastructure up, where all these demands and all this want of like this AI boom. Well, if you can't support it with power or energy, it doesn't go anywhere.
Chris, it sounds like you're a bull on the super exciting nuclear stuff that's been going on. Have you seen any of that? The nuclear.
I mean, I've been in uranium for the last 2 years. Yeah.
Very
cool. So I've had exposure to uranium. I traded. It's URNM.
Okay.
Remember this? This is the joke where I was like URA. That's the one ticker that I have. Yeah. So URNM. That's basically
the only one I've looked at. Yeah.
That's uranium miners. So that's Sprott Uranium Miners ETF.
Okay.
This one I've had some exposure on. It had a nice little rip from the 30s into the 60s. I took some profit along the way. I haven't done anything on this one recently because it's never really the miners that win me over. It's mostly I want the spot price. If you are here we go again. I've got it at let's see. I've got a collar trade on some of the owned shares. My break even's at $30. I've got a 37 by 25 collar trade out to April.
Are the options liquid on URA?
Liquid enough. They're okay.
Liquid enough. Okay.
Yeah. I mean, I would say this is why I have protection on the downside, because if we have something volatile, I mean, the IV on this is pretty high, 72.7. They're liquid enough to get filled at where I want to get filled at, set my take profits and monitor the levels. But let's go into something like 30 to 40 days out. You get 50-cent strikes, which is pretty nice. So it's fairly tight. The deltas are really close together. So I mean, yeah, they're pretty liquid. They're pretty liquid. Yeah.
Yeah. No, I like uranium stuff as well. I've just not really played the options side of it in a while. So that's, I've never actually played the options side of it, URA. So I'll take a look at that.
I did a lot back here. I did a lot of cash secured puts down here when we had that chop from 2022 to 2023. Same thing here when we had that big sell off. It was just a really nice trend line support. So I just kind of put in some ratio spreads, some credit spreads. But I've had shares most of the way since like low 20s. And I'm looking to see just on a measure move. This is a swing low to high. I've got a symmetry measurement around like $44. So we go low, high, higher low to higher high, and that put me in the $40. And so shares that I own, I'm happy to get rid of them here. If it gets more ridiculous, then perhaps I get this thing into like the 50s. But that's about all I would say I want to trade. So yeah, but that's it. URA, URNM, those are the two that I've got some exposure on. I'm not doing anything with like futures. I'm not doing anything with other crazy like illiquid instruments. I'm not doing any other companies that are saying like, oh, we're in the energy space, we're in nuclear energy. Maybe there are, but if they're like small caps and illiquid, I'm not trading them. I'm just doing like spot price uranium.
Okay. Yeah. No, very cool. Yeah, I like that play as well. Yeah. So again, guys, we're about 15 minutes out from Jerome Powell taking the stand. I hope they talk more about economic data and inflation and rates than what Trump had to say. But I unfortunately think that is going to be a big part of this press conference, is just a bunch of, are you going to lower rates because Trump said so? And
right.
I think he's just going to say, no, we don't make decisions off that. And so I think you're probably going to get a little bit of that bang your head against the wall commentary. But hopefully there's some good, insightful questions on where the Fed, I think a lot of people would like to, myself included, would like to hear the Fed comment on their last stance, which freaked people out, which was our inflation gauges kind of need to be thrown out the window. I'm paraphrasing massively, but that's kind of the idea. They were like, our inflation readings are kind of off. That was what freaked the market out. Is they're like, well, if you guys don't know what's happening with inflation, who the heck would? And
you pulled this from December 18th?
Yeah. Yeah.
Like, I mean, I don't remember the comments being that off base. I mean, obviously the market reacted poorly. I just thought it was because they were talking about not cutting rates in 2025. And that's where the market's like, oh boy, here we go.
I think it was basically, they signaled a pause, but there were some comments from Powell specifically when asked about where they see inflation. And he was softly saying, basically, we have to reevaluate our inflation. Like,
gotcha.
projections,
I mean,
or
they
our
should revalue
projections
a
were
lot
a
of
little
stuff.
off. Yeah.
They should let the market be the market and not be freaking Fed manipulated like it's been for 20 years.
Yeah.
You know? I mean, seriously, it's
right.
like it'd be a lot easier to trade it if it was actually fundamentals and free market trading versus like, what's the Fed doing? Everybody jump on the right side of the Fed or else you're going to lose money.
Yeah.
Or
No, it's
I
all
guess
about the Fed.
my
In
next
this
Fed is going to be
world,
Nancy
yeah.
Pelosi. That's my next Fed.
There you
I
go.
mean, if she dumps Nvidia 2 weeks before DeepSeek, then I mean, she truly is the insider goat. I mean, I don't know
saw that.
how did Martha Stewart go to jail and Nancy Pelosi's not? I don't know.
And then also, I think what she played like Palo Alto, which is up like crazy recently. Like anyways, you know, Chris, they get to have the fun. We have to do the work. So that's how
Yeah.
it's going to be, you know.
Yeah, man, she's the goat. She's the goat.
Great. The trading goddess, everyone.
Yeah.
I don't understand that. Everybody knows that joke. I'm going to say 95% of people in the audience are like, oh yeah, she just cheats. And it's like, how does that just go on? How does everybody know it? And yet it continues to happen anyways. It's a crazy,
I mean,
crazy world.
She's immune. She's above the law. She's bigger than McCracken.
It's crazy. Crazy. No, it's that's wild. I mean, it's not even at some point it's like, how many times can these people see exactly what's coming down the pipeline, place trades on? It's not just Nancy Pelosi. It's you know, everybody up there, but
Sure.
How can that just go on? Anyways, that doesn't help any of us to complain about. You got Bitcoin back down to just near flat on the day. S&P's giving back 0.8%, let's call it, on the day. It's a good little sell off, but again, just remember that is early in the kind of window of time here, because once we have Jerome Powell, this could massively continue to the downside,
Sure.
or it could reverse. Taking a look at the Nasdaq, big support level around this 21,000 to 20,750. That is NAS 100. Now we've also got this big trend line to the upside. I would say at first glance, innocent till proven guilty. But if you get a break of that, if there's follow through on last Fed meeting where it was like inflation's an issue. I mean, what happened last time? Markets freaked out and then kind of moved on with their life. And if it's a reminder, hey, we're still very worried about inflation, kind of thing,
Right.
that could cause some larger volatility.
All right, I'm just getting so we're just kind of smashing that little low at 600. I mean, if there's follow through, I'm seeing that 590 really light up now. So I'm gonna look to see if we crack below. If we get to like 595 today, Nick, I'm probably gonna start moving stops in that trade that I took. But right now, I'm just watching to see if we can make a break for it to the downside. Let's see. All right, I think I'm in there. Check my position. $1.25 trading for it's the same right now. Still trading break even. And this trade, with it being that far out of the money, it's super cheap, and there is a low percent of profit on this trade. But the trade-off is, if I'm right with that 595 or that 590, then the profit potential is 2x or 3x, and that's why I take little stabs like that when I see that I've got some real-time order flows, big market maker levels starting to line up, and everything to the upside has disappeared. Now, I know that at 2 o'clock, if this was like 1:30, I wouldn't be talking about this trade, but we have 2 p.m. news that's already dropped, and now it's just the press conference. So what I'm seeing is like order flows through today to Friday, because what's left? We have earnings, and we have PCE, and we have Powell speaking in about 10 minutes. So if he says something the market doesn't like, and these order flows are going to push down to fresh lows on the day, possibly revisit. Are we at lows for the week already, or not quite?
Not quite.
For the week, not even close. So, I mean, even if we came back down to retest the lows for the week, I think that's within reason. And that low for the week is right around 595.
Yep.
So I could see that, man. I could see the retest of 595. If we break that low, then I'm just hanging on to a stop loss that's moving and trailing. But I'd be pretty happy with that trade going through the 595 handle today. So I got to
say too, for the crypto fans out there, impressive today that you got Bitcoin holding on to a 0.45% gain, S&P down 0.7. I mean, that's pretty impressive. I like to take these opportunities too to talk about relative strength. Everybody who's watching, look at your portfolio, look at your trading platform, and look at stuff that's doing well and look at stuff that's doing poorly. And that's kind of your relative strength indicator across your kind of watch list. You got Bitcoin actually holding up well. So if you do get a risk on push, Bitcoin could potentially continue to lead that. And if you do get a bigger sell-off, maybe the S&P is kind of the bigger loser of the actually, I guess the Russell could take the biggest hit, but just give yourself an idea of what is holding up better than others. Also, everybody who's watching this, just a quick plug while we wait here for the Fed press conference. We are going to be watching the whole thing. Chris and I both share all of our trade alerts inside of our Discord server. If that is something that you're interested, if you'd like to get notified anytime we take new positions with full entries, breakdowns, explanations behind why the trades are happening, if that's something that would be beneficial to you, that is something that is available. You can see all trades being taken inside of the VIP service that we do offer. We trade indices, commodities, Forex, ETFs, stocks, options, a little bit of everything. If that's something that you're interested in, send us a direct message on the website. Someone from our support team who is standing by to help can get you a major discount on that for a very limited time. So click the link being dropped in the chat. If that's something you're interested, you can get our signals sent directly to your phone and desktop anytime we take a trade. With that said, we've got about 7 minutes to go here, Chris. And so far, just a quick check across the board. Indices slightly in the red here. Well, in the red today. Let's see if they follow through is a big question. Gold down 0.6. And again, relative strength here. Silver actually holding up nicely today, up 0.9% on a day that gold, the grandfather here doing a little bit worse than perhaps the young grandson here. That is gold. Bitcoin, maybe if gold is the grandfather, silver's the grandson, Bitcoin is like an infant. So Bitcoin is the youngest of that trio, but Bitcoin holding up okay, silver doing well. Dollar index is up today, so finding support around that 107.5, perhaps up on inflation concerns. So just a few minutes to go, Chris.
Yep, we've got dollar climbing, wait and see stance on interest rates. Shows here traders price in less Fed easing this year through the statement, kind of the wait and see approach. We've got the unchanged. We know that Treasury yields inch higher just by a little bit. Let's see here. Borrowing costs. All right, here's when borrowing costs might drop in 2025. Probably whenever the market crashes.
Yeah.
Market crashes are like, oh, by the way, that mortgage will come down 50 basis points now. You're welcome. And it's like, well, I lost my job. So
yeah, that's how that goes.
now I can't buy a house.
Yeah, exactly.
All right, here we go. So what else is going on? I'm just looking to see. I'm just catching up on financial juice for some real time. Short-term pause and funding. This is Trump stuff. I don't know why he's making headlines right now. Is he tweeting? I paused. Foreign organizations. He's also offering a 7-month severance package for DEI, which is basically saying whatever they want to do to fire people at the government level. They're offering him a little severance package, but it's probably more firings to come, more terminations. Sentiment-wise, that can't be great either. I mean, that's good for government efficiency, but if you've got government layoffs, I mean, think about where the jobs were over the last couple of years. It was leisure and hospitality, government, and healthcare.
Yep.
If you're getting lean and mean in the government, I don't know, man. I mean, I don't know. It's not easy. Like anytime you're talking about, significant layoffs, it's gonna weigh on the labor market a little bit.
Chris, what would you do if in 5 minutes we pull up the live stream and we're all expecting Jerome Powell to walk out, and instead Donald Trump walks out on the stand and he says, Powell's not here right now?
I honestly, the market would probably go up, to be honest.
Probably would go
It'd
up.
probably go up.
They would read him like a book and say, this guy's going to go negative interest rates.
Yep. And look, sign up for your hyperinflation later, but this market's going to bubble if Trump shows up to the podium.
Yeah. No.
Yeah, that'd be pretty nuts.
That would honestly be a really funny prank. If they did that and then they shook hands, I think the market would go back up. It would go up first and then go back down.
Yeah, that'd be wild. It wouldn't surprise me in some way. Like, dude, of these next 4 years, nothing would surprise me.
Man, I hope they would never do that, but that would be such a good like April Fool's prank if they did that together. Like, oh, an unexpected announcement from Jerome Powell, and then it's actually just Trump.
Yep.
Anyways,
I'm surprised.
Well,
next up is AI. AI would just do that for us.
Yeah, right, exactly. Chris, VIX is up 6% today, up to a 17 on the VIX. So nothing. It's kind of weird. We look at a 17 differently than years ago. 17 was kind of low. Now you're looking at 17 a little differently. Yesterday or last few days, VIX got up to 22 and a half or so. I don't know. We'll see where volatility goes. But
one thing that is interesting, type in this in your screen, Nick. VIX1D.
CBOE 1-day volatility index.
Look at this on the day,
Interesting.
50% on the day.
So this is like the intraday kind of.
Yep. So
VIX?
anytime, so for a lot of the zero DT trading, if
Uh-huh.
you're selling premium, VIX one day spiking up like this is a pretty good measure. This is a
Mhm.
lot more accurate when it comes to how do I position for zero DT if I'm getting higher premiums on volatility. So yeah, I use this as a reference right alongside. I mean, the VIX is a 30-day instrument for the S&P volatility. The VIX one day though, it's way up today. So I'm wondering if you go back to the big spike you see there on December 18th. I mean, that was again way the heck up there. And the last one
Mhm.
before that was August 2nd to the 5th, where that was that crazy weekend and
Yep.
Friday to Monday. But I mean, it's you can look at the one day; it's gone from basically 550 up to like 20 and change. Without really breaking any crazy levels. You've got your outliers that those two notable days, like December 18th was the Fed, and August 2nd and 5th was the non-farm and Bank of Japan kind of deleveraging combo. So, I mean, we have to have a big move, but for just today, it's like the thing's up 50% today. Now, either this gets smashed lower, or we elevate back into the, maybe we go to the mid 20s today, and we see more of a pressure to the downside. So, real quick, are we like just kind of inching our way lower? I mean, Powell's coming in at 228. I don't know if he saves the market. This is what I kept talking about, referring to. Like I've seen this grow all morning from basically a 595 strike around 700 to now the 595 is at 758. These are current net, just order flows, how I use this aggregate score. It's been climbing, and then this 590 just showed up with like a monster net, like negative 2000. So it just shows like gamma exposure. All of your like order flows and option flows are leaning towards this liquidity hunt towards like the 595 and the 590 level.
Yep.
So if we just keep, I mean, whether this is a fake out, and this can happen in FOMC too, if the market does like a fake out, pulls back up here, then I'm going to watch my 125 probably turn into like $1 or 90 cents. But if we end up gapping lower or have something that gets the market to find this level, I'm just looking to see if I can turn that $1.25 debit into something profitable. If we have the market selling off today, we're breaking this low. If there's more pressure through the press conference with Powell, this level I would say is kind of target one, target two, moving my stop losses and trying to take some profit today. If I'm paid today, I'm paid today. If not, I will probably ride this thing out through Friday just to see what PCE does. But when I see levels that stand out like that, they usually get hit.
Yep.
They usually get hit.
Guys, we have the press conference happening soon. James or Chandler, if one of you guys, I think Chandler's on the button with it. We've got the stand. Whenever that is, whenever you see Powell walking up, Chandler, go ahead and throw it up on the screen. But just standing by, we've got that ready for us, guys. We'll have that on the screen so that we can all watch. And we'll have that for you. Quick check while we wait here. You have got stocks lower here across the board. Nas, S&P, Dow, pretty solid selling. Okay, we got Powell stepping up, so let's go ahead and switch over.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work. And that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market.
Did Trump say something about Bitcoin?
To shorten that sentence.
Just now?
Again, I
think so.
If you look at the sort of intermediate,
apparently he's streaming too.
Good, and there was another inflation.
He's
reading,
tweeting at least.
Just before the
Him and Elon are just hanging out.
Two good readings in a row.
Everything I see in real-time news is just all Powell.
Again, we're not going to overinterpret too good
Bitcoin
or too
up to
bad
104.
readings, but
Is it really?
Meant to send a signal. Other
Wow.
than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully. And as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes, in answer to your first question. But to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that. I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
As I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. it does seem to, the labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those two things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. You think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think, at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria. Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed? Sometimes, never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but
Chris, you got to bounce.
A lot from companies.
I got to bounce. All right.
Consumers
Thanks.
See you, man. Good talking to you.
Yep. Bye-bye.
So
See ya.
I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know, and we didn't know, by the way, in 2018. We didn't really know, and the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you, Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So,
I'm surprised someone asked that.
About runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that the rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis. Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018, there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment has stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see it. There's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today. And I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. That, the possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies, which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy, and so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
All right, there you go, guys. Jerome Powell. Yeah, pretty interesting, especially that kind of right at the end there discussing cryptocurrency. I was watching Bitcoin as that kind of pushed higher on Jerome Powell's comments there. Just thought that was interesting. It's interesting to me, too, how just across the board, it seems like most politicians have had just, I don't think Powell's ever like super anti-crypto, but that was a pretty okay with crypto, non-threatening response for the Bitcoin guys out there. That's interesting. Stocks moved lower, then ripped back higher. This seems like a classic Fed day. You get a bit of a swing in both directions, caused some uncertainty. Big shoot lower on the Dow, then it came right back. Russell, same thing. Nasdaq, same thing. I would argue that the reaction here overall would be pretty bullish. Now that risk is behind us, markets are probably going to like that there was not some sort of impending doom about inflation commentary. I would say Powell sounded somewhat dovish, to be honest. That I would say that was not a incredibly hawkish Jerome Powell. And trust me, you will know when it's an incredibly hawkish Jerome Powell because everything sells off massively. But we've got stocks down 0.3% for the S&P, Nasdaq down 0.12%. That does not seem like an incredibly hawkish Jerome Powell commentary. Otherwise, you'd get more aggressive moves. And meanwhile, Bitcoin is up 2.56%. Again, I was saying this earlier to Chris, but pay attention on days where you get kind of mixed market action. Look at your winners. Today, Bitcoin is one of your winners. Really strong move higher for Bitcoin. I continue to like the Bitcoin upside play. I've been long Bitcoin for some time, I've been trading it here recently for the last few weeks. I've been long since 91,000. 104 seems pretty clear coming into the picture. And I would not be surprised if we do get some follow through and come to the highs. I mean, that was, again, like I said, a relatively, I would say, dovish Powell compared to what it could have been. You got Nasdaq flat on the day, right? Nasdaq at some point today was down 0.75. So bit of a bounce back for a lot of stocks. I did during that period take some trades inside of the VIP room. All of those trades again can be logged or will be logged, and you can see them inside of our Discord. It took some long positions on some indices, and we'll see where it goes next. But liked the intraday bounce, sounded like a dovish Powell, and I'm going to continue to stay kind of aligned with where we see Edgefinder, which is if we take a look at indices, still holding supreme at the top. You got Dow Jones, SPX, and Nasdaq all getting bullish readings. Bitcoin as well. So I'm staying on the risk on trade, staying true to the system that I trade. Edgefinder has been very spot on recently, so I'm going to stick with the trades. Edgefinder's 35% off. We dropped that in the chat when we were discussing. Don't miss the opportunity to get a major discount on the tool for many of you who are watching. If you're not familiar with the Edgefinder, I'll just give you a quick overview. The Edgefinder is a market scanning software for traders looking to get more into fundamental analysis and trying to better understand what truly moves the markets, which is stuff like we just watched. There are 2,100 people watching this stream between the different places that we are streaming to right now. Fundamentals move the market. When Powell speaks, that is fundamental analysis. That is monetary policy. It's the flow of the Federal Reserve's, coffers in or out of the market that makes everything go up or down. It matters so much. So tracking what the Fed is focused on through the use of the Edgefinder is a really powerful and important thing to understand. The Edgefinder looks at economic data just like the Fed does and tries to make a general observation on economic data and how it could lean the Fed to do certain things or not. So for example, Bitcoin is getting a bullish reading overall. You've got Nasdaq getting a bullish reading. Part of the reason for that is if we take a look at the underlying calculations here the Edgefinder is doing, look at the US economic heat map and you'll see that you've got a lot of stuff blue here. That's showing or favoring a risk on environment. You've got strong GDP growth. You heard Powell talking about strong economy, right? This stuff is what the Fed is looking at too. So that's what we're trying to do with the software, is to focus on what the Fed is looking at and try and kind of align with what they might say or do next. So we take a look, for example, at inflation. Jerome Powell made mention that some of the recent reportings on inflation were better than feared. That is exactly what we see in the Edgefinder, right? Core CPI, PPI year over year, CPI. These numbers have been relatively less threatening than what was feared by market forecasts. So again, we are trying to, with the software like this, track key economic metrics that the Fed may use to make their decision so that we can trade in the right direction, trade in the direction of fundamentals, and improve our probability of success with our trades. If you don't already have access to the Edgefinder, it is a massive sale that we're doing this week. We're doing 35% off the product for a limited time. Click the link being dropped in the chat. Take advantage of that discount before it ends. We'll do it 35% off until the end of this stream. So take advantage of that offer while it lasts and don't miss your opportunity. So again, I'll be continuing to look at some of the setups on the Edgefinder here. We went through a lot of them today. I am still looking at U.S. oil bullish setups. I may get stopped out on my first attempt, but I'm looking for a second attempt on oil. I'm also watching, like I said, my Bitcoin trade, Nasdaq trade. Let's take a little look at the aftermath. You've got Nasdaq and actually actually in the positive after all that chaos today. Bitcoin up 3%. Love to see it. We're trading into the 104s right now. Going to let that trade continue to run. Got my silver long position or my silver short put bullish position looking great here with that bounce. Love to see that as well. So going to stay convicted, staying true and staying patient to the trends that we're seeing in the data. Stay, again, focused on whatever your system is, you do your thing. But for me right now, system is telling me stay true to the trends that we're seeing. Bitcoin, Dow, Nasdaq, all that stuff. I'm going to continue to trade the way I've been trading because it's been working. And that's, I've used the same system for years for a reason. It works. You just got to have the patience. Pay attention to the system, wait for your entries, manage risk appropriately. You'll do fine. But if you're out there, throwing guesses at the markets and you're not trading with a system, you are inevitably going to throw your money away in the markets. So again, whether the Edge Finder is a system that you use or you use something else, do not go out there and just gut guess where the market's going to go next, right? If you're out there just making decisions, oh, I think this chart could go up. Oh, I think that chart's going to go down. Like if that's what you're doing, you are basically a roulette player at the roulette table. You've got to have a system. You've got to have a strategy. You've got to have a risk management model. These are not, oh yeah, that would probably help my trading. No, those are imperative things to trading success. I work with thousands of traders and so many people are just, oh yeah, Bitcoin looks good, I'm going to buy that. Or, oh, Nasdaq looks bearish, I'm going to sell that. That's not a trading strategy. You are one of the players at the casino and you may not realize it. So many traders are. I've been there. Everybody's been there when they don't properly have a system and an approach to the markets. So again, whether it's the Edge Finder or it's something else, get yourself a system in place that's back tested, that's thoroughly kind of been researched and there's a real approach there, and then learn to manage your risk and find your entries. That is what's going to make the difference of being profitable or losing money in the markets. Bitcoin, for those of you who are also watching this with me, I have my initial entry here, my stop loss here. I am looking for an opportunity to trail my stop loss further into profit, but I have a rule set for a reason. I am looking for a break and closure above the all-time high. If I can get that, that is my cue to take my stop loss and move it further into profit, looking specifically for any sort of higher lows to do so at. I'm watching Bitcoin. I'm trailing stops. It's my biggest winner right now, and I'm going to try and continue to hold that one. S&P 500, I'm also long. I'm in profit on this position, but it hasn't really made a huge move. Looking to tighten stops on this one if we can take out those all-time highs and continue the rip. But I do believe there's a stronger probability here that we continue to go towards all-time highs on indices than break those lows and continue lower. I think there's a very good shot that we do see that. So that's my opinion. I could be dead wrong. As always, that's the beauty of trading. Nobody knows for certainty what's going to happen next. That's why it's a marketplace. If there was certainty, the chart wouldn't move. It would just kind of gap to the perfect price. But again, there's always speculation and changing data. So that's what makes trading potentially profitable to those who have systems and approaches, and a giant money sink for people who do not have systems and risk management models. Like I said, last call on that. If you're interested in the Edge Finder, find us on our website, a1trading.com/edgefinder, or click the link being dropped in the chat to speak directly to our support team and get 35% off the product. It is a one-time, lifetime payment to get access to our software and start trading with the same tools that I use. Thanks, guys, for watching. That's going to be the end of the stream today. Appreciate everybody who hung out with us. It was a 6-hour stream between everybody who came on and hosted the show. We appreciate all of our contributors here on the A1 show, and, of course, to you guys for supporting the stream. Thank you for being here. Happy trading. Trade safe. We'll see you tomorrow.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.